Welcome to another episode of Bitcoin Magazine Live. I am your host, Q, coming to you yet again from my mother's basement, and we have an exciting episode today in store for you all. Of course, today is the aforementioned FOMC meeting. We will all be doing a nice little sacrifice to our financial god, Jerome Powell, later in the show. But of course, we're going to kick things off right away with the final day of coverage of the Hodlonaut v. Craig Wright trial. Chris, can we roll the tape from day 7?
The final day of the 7-day Hodlonaut versus Craig Wright trial here in Oslo, Norway. Myklebust and Haukus concluded the closing statements before the first break. The remainder of the day was Manhouse and Helly delivering the closing statements for Craig Wright. During the closing statements, Manhouse cited all of the major arguments that had been highlighted throughout the case, and Helly went through all of the witnesses that had come to testify for Craig Wright. After Manhouse concluded, the judge permitted Haukus time for a rebuttal. Haukus did an additional 40 minutes of rebuttal, and then Myklebust had a few clarifying points as well. During the 40-minute rebuttal, Craig was scribbling furiously and ripping pages very loudly, passing them to Helly. Then the judge went back to Manhouse and said that he could have an additional 40 minutes, which he did not take. The last part of the day, the judge went over the court costs and the timeline for the ruling. In the discussion of the court costs, Haukus objected because Craig Wright's fees are almost double what Hodlonaut's legal fees are. After the discussion about the court costs, the judge permitted 2.5 weeks for Manhouse to settle all of their court expenses, but with the agreement that the BDO and Cypher expenses would be sent in the following days to Haukus. As to the ruling, the judge said the 8th of November. It might be ready before then, but she will give a 1-day notice to both parties before the ruling is announced. We will keep you up to date as we get more information about the ruling. That's it for this 7-day court case. Thanks for tuning in.
We are now joined by our reporter on the ground, Mills. Welcome back to Bitcoin Magazine Live.
Thank you so much for having me. This is the last day of being a reporter, This is it.
While we do have you, as the recap showed, we did hear Craig Wright's team's closing statements, and of course on Monday we heard Hodlonaut's team's closing statements as well. I want to just sort of back up to Monday. Off of the heels of Hodlonaut's closing statements, did the court today start with any surprises or anything to carry over from Monday, or did they just dive right into Craig Wright's testimony?
So the first pre-break, so like around 90 minutes of the day, was actually wrapping up of the Hodlonaut closing statements. So there was a little bit more that Myklebust was in the middle of presenting, and then it shifted over, and then both Helly and Manhouse were doing the full closing, and it was a very different vibe in court, I would say, today. There was a lot of energy on Monday, and it did not feel that same way today. And I talked to a couple people that have been throughout this case, afterwards, and everyone kind of felt that same. It was a long day. It was heavy, and a lot of, we've heard the same arguments, the Andreas signing, the Sartre blog post, that we've heard a lot of these same things over and over, and a lot of the same documents, and it was very much a recap of everything yet again. That it just felt long. Felt like a long day.
No, it's been a long week and a half, to say the least, and with things wrapping up. Do you mind sharing with us, how did Craig's team frame their closing remarks? We heard a lot from Hodlonaut's team framing it around the fight for freedom of speech, citing the Constitution over there in Norway, and just highlighting the importance of what this case holds. How did Craig's team approach that, their closing remarks?
Yeah, a lot of the argument initially was built on saying that Hodlonaut had this platform and has this, access to all of these people, kind of saying how influential these tweets really were. And then the next part of the argument was talking about media and, there was an acknowledgement that it is in the media's rights to criticize and to question. And then there was a lot of, well, is someone in the public sphere or in the private sphere? And a lot of previous cases in different countries all over the world that have involved defamation were cited as evidence and references and compared with the specific laws in Norway. But it was interesting because then after kind of saying that Hodlonaut had this amazing platform and was this spokesperson, then it was an argument that he is not a media watchdog and is not a reporter and is not a journalist and is not, protected under those guidances. And then it went back to saying, but then he's very famous on Bitcoin Twitter, and Jack Dorsey's name repeatedly brought up of how much influence and access he had. So I felt a little whiplash as I'm synthesizing all of this information. It felt like there was an argument that he was really pivotal, and then that he wasn't really pivotal, and then he was a real voice. So I don't know what the strategy was there, and maybe that was my assessment. Like, as you know, I'm listening to the court translators that are anyone that's in the courtroom can listen to these headsets, and it's translated into English. And I'm also sitting next to a translator that is not listening to that and translating from Norwegian into English, and we're kind of just time stamping and going through each of the points. So I at least have two different inputs to synthesize between, but there were definitely some moments where it felt like I lost the plot a little bit about the arch of the argument and kind of what was trying to be pulled or crafted. And then a lot of emphasis was placed on all of the witnesses that Craig Wright's team had called, and also a lot of effort to kind of discredit the documentary evidence and, saying the KPMG report was invalidated by BDO and by Cypher. And it felt a little like everything, that had been presented mostly on Monday in the closing of Hodlonaut's team was then pretty directly refuted. So then when it went back to Haukus to do a rebuttal, there was definitely a lot of, I guess, pointing out that there was this push and pull, and it just kind of felt like a bit of a messy day logically, if that makes sense.
It does. It almost, it seems as though there's certain angles that Craig Wright's team is trying to play. I'm assuming that during these closing remarks, the judge is no longer asking any more questions, or were there any more questions from the judge to get further clarity before she goes to make her determination?
There really weren't a lot of additional questions that the judge was posing. It wasn't until the final discussion between both parties that the judge was mediating about court costs. And that was something that was brought up in the final closing of Hodlonaut's lawyers this morning. And then that's pretty much how the Craig Wright closing as well went, that neither party thinks that they should be responsible for the court costs. So there is, because in this case, Hodlonaut is the plaintiff and Craig Wright is the defendant, because, this was a reactionary case called by Hodlonaut in reply to the letter, the serving that he received from Craig Wright before all of this kind of started unraveling and unfolding. So both parties basically said, yeah, we shouldn't be responsible. Our client should not be responsible for the financial burden of this. So I'm not sure if there's precedent for, I don't know exactly how it's going to go with this case. If there's a way that the judge says, okay, everyone's responsible for their own court case fees, or I'm not sure what the options are with the ruling, but there wasn't a final number presented by Craig Wright's team that involved the fees that were paid to BDO and to Cypher. So Manshouse has a couple days to get that to Haukus, and then they will both know the full fees. But more or less, it's double. It's around double Craig Wright's fees versus Hodlonaut's fees. I mean, 10 lawyers versus 2. But it will be interesting to see kind of how this ends up. And I would say it's a little over $1 million estimated of Craig Wright's fees, but we'll hopefully know those numbers in the next week or two. The judge said October 7th for final court fees to be submitted to her.
And so, as we also heard, the determination should be made no later than November 8th. Could we talk a little bit about what the expected timeline is pretty much from now until then? My assumption is everyone is just going to have to hang tight while this judge reviews everything she's heard over the last week and a half before finally making this determination.
Yeah, and she said that it could be sooner. And she said typically it's a couple weeks, but that's not what is going to happen with this case. And she did say that there will be a day notice given to both parties before, and then also an hour preparation on the day of the ruling being announced, that both parties will also have time so they can prepare their statements. And it felt, she's definitely trying to make everyone be as involved in this timeline as possible. But it does seem that she doesn't think it's going to just be a quick decision that she's going to just come up with. It sounds like she's given herself enough time to be certain that she will have the ruling by that date. But it didn't sound like, yeah, and for sure it will be sooner. It sounds like maybe there's a chance that it does happen earlier than November 8th.
So let's unpack a little bit more of today's conversation from Craig's team. From what I've been able to gather from your reporting, both on Twitter as well as our discussion here, it seems as though rather than the technical components of Craig Wright's validity to his claim, their argument is more so around Hodlonaut having done something right or wrong, and the degree in which his actions are deemed right or wrong seem to be how, for lack of a better way of putting this, how famous does the judge think he is on the pedigree of the Bitcoin ecosystem? Is that an appropriate summation of like Craig Wright's essentially team stance at this point?
Yeah, it does. It does feel like they've built a strong argument saying that this is why this is very defamatory and damaging to Craig Wright's business and his, both to Enchain, both to BSV, like that it is very damaging. There was a lot of emphasis placed on whether or not Craig is a public figure, and there was some discussion about when he came forward as Satoshi, and then also that it wasn't his preference. A lot of that was cited as well. It feels as though there is the burden of the argument is on the witnesses that are basically vouching. And in my opinion, I think Haukus could have gone a lot harder. Maybe I don't understand, why he didn't, but a lot of the witnesses are financially involved with Craig Wright in business, or have been in the past, or are still in some capacity. So it did feel like most of his witnesses were, there was a family member, there were people that are currently on the board of his company. So there were a lot of connections with the witnesses. And that was something that Manshaus actually brought up, saying that Hodlonaut's witnesses were kind of all expert witnesses, and they're all into Bitcoin. Even though some of the witnesses aren't, Bitcoin maximalists, there was definitely, these witnesses are much more already in this world. They're already a part of whether, Bitcoin Twitter. And each of them was asked, like, did you see this tweet? To which none of them, really were like, yeah, I saw these or whatever. They didn't really say that they had seen them. And then also did say they probably wouldn't have retweeted or, said that themselves. But that was more the argument that was taking place. Whereas with a lot of the witnesses that Craig Wright's team called, it was both to vouch for his technical ability and his personal confrontational, and autism came up again, the discussion of, is it a mental illness, and Hodlonaut not being aware of his actual diagnosis at the time of these tweets, that was another thing brought up. But it's not necessarily how famous Hodlonaut was or wasn't. It is under what motivation and purpose were these tweets sent out. And the Bitcoin Plebs group on Telegram was brought up again, and their Manshouse was talking about the, different things that were talked about in there, showing slides, screenshots of this Telegram group. But when there was the rebuttal, Hawkes was able to say, there's no, this is all hearsay, this is all conjecture, because there's no evidentiary proof that Hodlonaut was actually in that group, and the screenshots that are citing him make it actually much more likely that he wasn't, because there are people in this group that were talking about helping him out or joining in, being a part of what he was doing, which would have seemed a little weird if he was actually in that Telegram group specifically. And Manshouse was citing that this group was, to elicit violent behavior against BSV, to launch an attack, to be a specific target. So I think more so than Hodlonaut's clout and place within the space, it is the intention, and it is the whether or not he was doing this for just his own, or bringing, attacking Craig Wright and bringing his name down, or if it was in the intention of protecting the public against someone that he saw as, a potential threat that people could be misled by. That if he's more of a whistleblower that is saying, hey, this is really something you should be aware of, versus this person's terrible. And a lot of, the there was a lot of acknowledgement that Craig Wright does not only use kind words himself on Twitter. And so there was much acknowledgement that these are defamatory tweets, in the sense that they are criticizing Craig Wright and his character and who he is. They're not kind tweets. That's not really debated, but it's on how seriousness and at what level they can be judged. And there is more protection under freedom of speech to criticize, an idea than there is a person specifically. So, and then there's also different parameters if you're more of a journalist or a media or blogger that is looking out for, your community, than if you're just an individual kind of going head to head.
This really is, and I know we've kind of talked about this, but this really does feel like a David and Goliath court case. And the framing of some of these conversations, it's a little worrisome. I have to admit that I think just some of the things that are being said in this courtroom and the weight that they carry in the broader context of Bitcoin and just the broader ecosystem, it'll be interesting to see what the decision will be and how I think future court cases will be impacted by whatever is decided here in Oslo. Do you have a sense of, excuse me, when Craig Wright's next lawsuit is set to begin and where that would be?
Well, I don't know if there's something between now and then, but there is a hearing of sorts it's like the next step for the Hodlonaut Craig Wright case in the UK, scheduled for December. So it was actually brought up today, and the judge said, this decision is about this decision, and this isn't necessarily regarding all the other cases that are happening. But I believe it was Manshouse that said, this is global. There's other cases, and this ruling will also impact those. And the judge really confirmed that this is the Norwegian court. This is this case specifically, and she's focused on this ruling in particular. And the big distinction between this Norwegian court case and the UK case, Hodlonaut brought this case, and it includes 9 tweets over 4 days. The case in the UK has been whittled down to 1 tweet, I believe, and it is brought by Craig Wright. So this was the initial what started all of this. And there were actually, and I know it's been mentioned before, but Manshaus again said, there was no attempt to have a civil conversation and reconcile after Craig had sent Hodlonaut the letter. That Hodlonaut instead sought legal counsel in the UK. They said delete the tweets, hopefully it'll go away. It did not go away, and then he brought the legal suit in Norway. But Manshaus says, there was room for an amicable resolution. They could have talked about it. And something that was interesting today too, since I don't know the exact date that Craig Wright's Twitter was deleted, but they said that Craig Wright had no way of replying or commenting to these tweets, which in the rebuttal, Mickelbust actually clarified that was wrong, that Craig Wright did still have a Twitter and he could have commented and he could have replied and he could have engaged and they could have discussed these tweets as well. So it seems like, that there is an acknowledgement that this could have maybe not gone to the court so quickly, but I think also there's precedent and there's knowing that Craig Wright is very litigious. I don't know that having a conversation seemed like it would be a welcome or a possible outcome, an opportunity for resolution.
I find it so fascinating that the judge specifically said that this decision will not carry or should be considered independent of any of these other court cases, given how many other court cases there actually are, which I think personally should be a factor in just any decision being made around this. I will remain, I think, optimistic and hopeful that should a decision fall in favor of Hodlonaut, that will in turn reflect favorably upon the upcoming court case in the UK.
And she wasn't saying that it wouldn't, but that's not a part of this case. So
Right.
as in her decision.
Right. So I'm going to then take that as saying she's not necessarily considering the fact that Craig Wright is suing just about anyone that he sees fit who says something he doesn't like. That's not a part of this.
Well, I don't think there's a way it could not be a part of this in some degree, because so much of the evidence, the A bundle, the B bundle, so much of these documents cite previous legal cases, previous testimonies, previous witnesses. So it's very implied that there have been many previous cases, and the Florida case was discussed and brought up multiple times. So there's really no way that she could avoid that there were other court cases that have been a part of this, that there's a legacy of other trials before this. So I don't know that there's any way to ignore that. However, it does seem that she's really trying to look at this situation specifically. And even though the McCormick case was brought up a few times and there were some specifics that were also used from the McCormick evidence that, that were cited as well, it doesn't feel as if this is, hey, let's draw the parallels, let's see, and even how that ruling went. I think, Manshaus was like, well, and Craig won this case against McCormick, but when in reality, the ruling was for £1 British pound, and doesn't mean that that's all the costs associated with that decision, because legal fees are also much more than £1. However, it does feel like the judge isn't trying to draw parallels beyond exactly what this situation is and exactly what has gone down within Hodlonaut and Craig Wright's interactions on Twitter.
And I want to first start with Hodlonaut's team. We've obviously had the opportunity to speak to them. How was their team? Were they in good spirits? Did they feel optimistic as the court session today ended and the week and a half long trial has come to an end?
Yeah, I had a phone call with Hodlonaut after the case, and he's relieved. Yeah, and to be honest, it is hard to know exactly how this ruling is going to go, and just has to kind of not think about it for a little while and recover from this very long, grueling, and high energy investment of a process. He said after his testimony, it felt like that was kind of the biggest hurdle because he's never been involved in a court case before. So it's hard. I mean, even going into this, it's hard to know exactly what to expect and how it's going to go and what the procedures are. And for me, I've only been in American court, so this is a totally different dynamic and style of judiciary systems. But I think his big, he loved all of the support. There were numerous local Bitcoiners and not so local Bitcoiners that came and spent a day or the whole trial, but would come by and be there and show their support for him. And also just the support from the online community that Bitcoin Twitter is, that he's had. There's still a lot of Space Cat avatars out in the wild. And I think just feeling that support and feeling that solidarity has been a huge impact, even just for morale and keeping spirits high. And he also wanted to thank Bitcoin Magazine for reporting. And that was something Matt brought up on Monday, which I guess maybe I'm a little too close right now. I've been a little too close to this case for a little while, but this is a different precedent being set that CoinGeek or any of the kind of more Calvin and Craig loyal reporting aren't the only ones covering this or submitting. And I mean, as much as I'm sure, and it will continue, a lot of criticisms that I'm not impartial, and I'm not saying there isn't, some more affiliation on one side. However, there isn't a financial investment, and that's a big difference. But Hodlonaut just was very thankful and very grateful for the support that the community has really shown, and that Bitcoin Magazine has been sharing this. And we are working at hopefully we can get some of the witness testimonies as well. The biggest hurdle is that, as previously mentioned, the whole thing was pretty much in Norwegian, and it does take a lot of time to translate. We are very close to being done with subtitles for Hodlonaut's witness testimony. So we will update that on that testimony is already live on our YouTube, but we will work to put those subtitles as soon as we have that finished file. And then we will also be working to do the closing statements, both from Manshaus and Haukus. So we are working to continue to give the viewer the ability to draw your own conclusions, watch the whole trial. I mean, it's been more or less, 8-ish hours for 7 days. So it's been a lot of footage, a lot of talking, and a lot of back and forth. But we will continue working at getting more of the actual footage from the court out. And as I think we've discussed previously, we've shared this footage with any of the other media companies that have applied to utilize this, because the way the Norwegian court worked when they selected Bitcoin Magazine to be the winner of the press pool, we now are holding all of that footage. We were the ones that were permitted to film, but with the stipulation that we share that with anyone that applies and works within the parameters of the court. And we as at Bitcoin Magazine are trying to protect Hodlonaut's identity per his wishes, but I am sure that there will probably be different best practices observed by different media publications.
I'm biting my tongue because there's a lot of things I want to say that need to be left unsaid, but I do need to ask and remind everyone, while we do cover Bitcoin Magazine, we have been speaking at length to Hodlonaut's team. We have reached out to Craig Wright's team to no avail. They have not responded to us for a request to interview. In fact, they've just been, Mills, correct if I'm wrong, kind of punting it, sending us to documentary people, essentially avoiding any and all of our requests. So we have it.
I'll clarify. Please. I reached out to the documentary people because I've been in touch with them, and they forwarded to Craig's PR company. But the documentary, they have exclusive rights to Craig Wright and to his story. And so that's kind of why I went that way. So then I did hear back from the PR company, and they said, Monday was the holiday in the UK for the Queen's funeral. So I don't know if that was just everything kind of working against, but no, we were not able to have an interview with Craig Wright, but did discuss with the team to at least that was attempted. That was definitely attempted.
I'm going to say this off of what Mills said earlier, and then Mills, I will cede the floor to you for final words. We have done everything in our effort to protect the identity of Hodlonaut as we would any student, any NIM that wants an opportunity to be or share their ideas publicly. This unfortunately has not been the case across other media platforms that have been covering this trial. As someone who calls myself an armchair journalist, candidly, that's a disgusting act to dox someone in that way. I urge you, if you see footage like this, to report it. This is for the protection of someone and their family. And any act to ignore such requests, any attempt to just act as though it's acceptable to dox someone who has gone out of their way to not, that is an aggressive act. That is an aggressive act.
And there was actually a lot of discussion in court, both mostly from Manshouse, a little bit from the judge, that like it's too late. That was kind of their assessment of, he can't, like, Hodlonaut doesn't really have the freedom at this point to choose that he is private, partly by going through with this case. But I do think, to your point, there's a difference between making it, like there's still a way that we can protect our comrade, like there is still a way to really honor. And all of the interviews, all of the things that we are posting with Hodlonaut, we're blurring his face and, censoring his real name. But it is hard because based on the agreements, like all of that footage has his name and his face. And by going through with this trial in this court, that is legally out there now. So I love your passion, and we are doing our best as a publication to really respect his wishes. And obviously, still, I know his name. I still call him Hodlonaut as a sign of respect to that,
Absolutely. It is exactly that. It's a sign of respect. I as well have learned Hodlonaut's name during this process, and I have no reason to ever say it. And it's arrogant too. And I think you're a disgusting person if you think that it's acceptable to dox someone. But that's just me, because it's getting out of hand out there, and we're still human beings. So don't forget that.
And I mean, I had a little joke with him after the trial of, how now I'm a court reporter, and I basically doxed my face more or less for this case to be able to spread awareness. And I've been technically went face public in April, but nothing to the degree of my face that is now out there attached to Mills as my name. So it has been, in the seeking to continue to protect the people that this is their wish. So it was a worthwhile cause for me. I think this case, I don't know, I hope there isn't another case like this. I hope this could be the one that is the deciding factor. But I've learned a lot about the BSV crowd. I've learned a lot about, the other factors at play throughout this. I'm really excited to have a little time to continue to process on everything that has just gone down. But what a week and a half, truly.
Mills, I just want to once again thank you for all of your work and reporting on the ground. A special shout out to Pleb Music, who has also been behind the scenes helping to cut up all of these videos. Thank you to both of you for all of your hard work out there. I want to remind everyone that is viewing, if you're not yet subscribed to our channel, hop on, just press the button down there on YouTube. Eventually, I'll get this right. Over there on Rumble. We're going to be back shortly, and we are going to sacrifice a goat with some macro experts, because it's that time of the year where Jerome Powell talks and we all listen.
Wow, I can't believe I'm interrupting and I have to follow that, but also major shout out to our translator and our video people that were locals from Norway that we hired that supported us. We had a really solid crew, and they were so lovely to work with, and the plebs in Norway are amazing, and I love Oslo. That's it. And now you're really sacrificing a goat?
Of course not, but apparently everyone cares what Jerome Powell has to say. So we may or may not sacrifice a little hodler, though.
Okay, well, thank you for everything, Q. It's been lovely chilling with you every single night for the past couple weeks. See you later.
Get some rest. Like and subscribe. We'll be back with after these commercial breaks. All.
You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. Samba.
Welcome back, and thank you for sticking through those commercial breaks. I am excited to introduce our guest today, none other than Sam Callahan. We will be joined later by our second special guest. Sam, welcome to the show. How are you doing? No, don't put him on yet. No, take him out. Yeah, there we go. Good.
What's up?
He's
dude?
still in timeout. We're mad at Pete.
What's wrong?
I'm
with you,
always
man?
here.
You okay?
All right, so we'll clue you in on what has happened. So about a month and a half ago, my co-host of this show, the letter that comes before Q in the alphabet, promised everyone that he would eat shoe leather if the Ethereum merge went through in just the month of September. And look, to be honest, I really didn't think it was going to happen. I thought it was like a very sound bet for him to make, but lo and behold, here we are. And conveniently, on the day of the merge, P was nowhere to be found. And for the last 5 days, we've been so worried. I've been on the phone with the police all over his hometown, his new hometown. I've been on the phone with his parents, not a single phone call or text all weekend while we're worried sick. And then he just shows up like nothing happened. Nope. We're mad at you, P.
Look, I had some deep research to do. I really looked at myself in the mirror, and the determination I came to is that I need to make good on my promise. The fact that the Ethereum quote unquote merge, which is really just a hard fork by another name, is totally bullshit is beside the point. So I want you to know I went and toured several leather factories. I have my setup right here, which I'm going to demonstrate for you in just a moment. Sam, I want your thoughts. Also, just beautiful microphone. Electro Voice RE20. Way to go, my friend. So look, I mean, you'll see like, you know. It's not going to work.
I'm glad P has gotten into the spirit of today.
Right,
as I did
Here we
mention,
go. There we go. We got the fire. It's burning. I'm learning how to cook shoe leather, how to remove the dangerous lethal elements like the vulcanized rubber, the patina that they put on the shoe to protect it from water. It's going to be real. Don't worry. Don't worry. So thank you for your patience, Q.
Now that you're caught up on the drama of Bitcoin Magazine Live, Sam, welcome back to the show.
Thanks, man. Happy to be here.
So in about 19 minutes from now, the FOMC will release their most recent rate hike stuff. I went and found my little stuffed kangaroo that we are going to sacrifice live on air before the minutes become official. And I want to ask you, Sam, at this point in 2022, do you even care anymore? about these FOMC meetings?
Um,
Please answer
I
the
don't
question, sir.
actually. I kind of don't. I might have never cared, to be honest with you. I think the Fed is more jawboning than anything, and I think we all know where this is going to lead, which is an eventual pivot. We don't know when that pivot is, but they've always pivoted in the past, and usually it happens probably longer than people suspect. And they have gotten the rates up higher than I kind of thought they could. So that's a testament to them, I guess, with the given debt levels. But I think it just takes time for monetary policy to actually get into the economy. I think there's a lag effect. And so I think we won't really see the effects of it in the real economy until later on, probably Q4, early Q1. You'll start to see things really start to turn in the economy. And then once there's some actual pain, then we'll see that the Fed is still spineless and they'll pivot again. So, I expect them to raise rates throughout the rest of the year, really. And I think it's going to be like a 75, 50, 50 kind of thing in terms of November and December too. And so I don't really expect that big of shocks right now. So yeah, I don't really care.
No, this is like in all of our conversations that we've had together, I've come to realize as someone who analyzes the macro environment and writes for Swan and does so much great stuff around this type of stuff, you care the absolute least about the political atmosphere and anything that comes out of Jerome Powell's mouth, which I, to a degree, almost admire because me being so anxiety ridden. Did he just say that? But I can't afford a house now. Like I could have afforded a house 12 months ago. I can't anymore. But besides the point, I want to get a sense from you. Earlier this week, we saw the 2-year yields, the 2-year treasury bonds shot up to 4% yield. I literally woke up to that news and was like so groggy. I thought I was still asleep because I was like, no, there's no way.
Mhm.
Curious what your reaction was to seeing such a steep spike to the 2-year yield this week.
Well, I think it just shows that the bond market, thinks they're not done. And, the Fed has never been so far behind the bond market in terms of its ability to raise. So
Wait,
I think it just,
can you qualify
sorry.
that? What do you mean by that?
Well, like if you just track like the federal funds rate to the 2-year, usually they track pretty closely. And right now, the 2-year is way above the federal funds rate. So that's what people mean when they say the Fed is behind the curve. And so really what the bond market is saying is that they think that the Fed needs to, either calm down, or let these things kind of play out. But the Fed is likely to keep over hiking and will probably overshoot things eventually. But just kind of shows that, the bond market is still seeing that there's, a lot of inflation risk in there and stuff like that. So we'll see what happens. But, people think that it's going to be a 75 bips raise here in a little bit. There's a potential that it could be an entire 1 percentage point raise, which would be a very, very steep hike in one meeting. But it's because there's this huge gap still between the 2-year and the federal funds. So people think that they're behind the curve, so to speak.
I want to spend some time talking to you about international markets because I know that you've spent so much time just studying these things and learning about it. But before we switch over, I do want to before we go so deep into the doom and gloom, I want to have a little bit of lighthearted, positive conversation here.
That's cool.
We see hash rate and difficulty hitting new all-time highs, suggesting miners are coming back online. We're seeing miner capitulation seem to slow down or almost end. Sam, what are some bullish tailwinds that you're seeing for just the broader Bitcoin ecosystem? And I don't give a shit about price because let's be real, it's going to go down and I want cheaper sats.
Well, hash rate going all-time high is definitely positive. I think really that's a function of these miners throughout 2021 who had access to capital and they were able to basically have a bunch of capex and decide that they're going to expand their facilities. And so what we're seeing now is those plans start to actually manifest, and they're actually plugging in the miners that they had planned, 9-12 months ago. And there's also supply chains issues. So that hash rate increase, I think it's more of just these large miners finally getting their stuff online rather than like more miners turning back on, or so to speak. And so that's a good thing. I mean, that's a good thing for the Bitcoin network. I think you're seeing like total supply held by long-term hodlers, hit like an all-time high, which is another positive development. I think it just shows that there's a convicted base of hodlers that aren't moving their coins. And it's probably everyone on this call right now is part of that. The other thing is just there's still like institutional interest throughout this bear market. Compared to 2018, there really wasn't these, developments in the bottom of the bear market. It was really quiet and it was kind of sad. And now you have like news like Fidelity coming out and considering, offering Bitcoin to millions of individual brokerage accounts. You got Franklin Templeton, also almost like $1 trillion manager, still in the middle of the bear market with Bitcoin down 70%. They're still building out infrastructure for the next bull run. And so that's bullish to me, like it just shows that even despite the price action, there's still excitement and interest at the institutional level, and infrastructure being built out. And so that's the kind of things that I like to see. So those three things are probably what I'd say, like hash rate all-time high. That's good. Miners kind of stop selling, or at least for now. So you can see that with the what's that indicator called? I'm kind of blanking on it. Charles Edwards came up with it. If Joe was here, he'd know what I'm talking about. But yeah, so it flipped, and so it kind of shows that miners have stopped selling, and you got long-term hodlers holding on, and then you got institutional interest. So those three things, those are bullish developments. So I'm excited about that.
So I want to unpack that last one because we had a philosophical debate on the show, P, while you were gone. And like, I'm curious your opinion as well as Sam's, but I'm going to take this stance going forward. I've already said it. I'm no longer going to cheer for any corporation, especially a $1 billion+ corporation that turns around and says, we're going to adopt Bitcoin, store Bitcoin, accept Bitcoin. Nor am I going to start celebrating or applaud high net worth individuals who decide, oh, I'm going to now buy up an allocated percentage of my net worth to Bitcoin. And my rationale, quite frankly, is just simply put, if Bitcoin is meant to be the life raft for the people, it needs to be in the hands of the people, not these corporations. But maybe I'm just a little too altruistic about this. Rip this argument apart, but let's discuss, because I think we may have gone too far in one direction, and it's time to start thinking about longevity and righting the ship a little bit.
So are you more like the cost basis? Like you want the cost basis lower for plebs, or are you more about the decentralization?
That is the right question. Look, Q has just betrayed himself as a fiat bitch. And look, that's okay. Sam, you and I can sit on the sidelines and be like, Q, one day you will learn the importance of Bitcoin. 1 Bitcoin equals 1 Bitcoin. Also, I have to say, the kangaroo that you have like just slightly in frame is terrifying to me. I don't know what's going on there. Every time I see more of it, it inspires more anxiety and fear in me.
But then let's solve the kangaroo dilemma. Sam, I'm rooting for 100 basis point rate hike. I just want chaos. I don't think there's enough blood on the streets for me to justify saying, oh, we're going to see a bull market return, and I want blood on the streets, quite frankly. So I'm willing to rip the head off of this kangaroo as sacrifice.
Wait, what?
But what? Oh yeah,
that kangaroo is that's your. I'm sorry, I understood that to be your childhood kangaroo. It's
it
pretty
is
brutal.
But I need to pray to the financial god that is Jerome Powell and show him what I'm willing to sacrifice for the blood on the streets that I hope to see.
Got it. So wait, jumping back. Jumping back. Q, I think your question was like, do we need to like you said, you are not going to celebrate, large holders or, the JP Morgans or the BlackRocks, like officially being like, yo, Bitcoin is dope. Because you feel like the average pleb needs to have more time to be able to get into the Bitcoin market. Is that a fair characterization?
Yeah, and I'll caveat it by saying, like, candidly, if I got no more Bitcoin ever again, like, I could live comfortably. I feel like I do
What does
have,
that have to do with anything?
because I don't want you to think like, oh, I'm doing this because I want cheap Bitcoin. Like, no, fuck that. I'm doing this because
You're like, yo, I'm rich as fuck. Like, don't even trip, dog.
but it's more from the lens of, if all of a sudden you have someone like a Michael Saylor with 500,000 Bitcoin, and you have a company like Apple, Tesla, Google, Microsoft that combine to hold another 2.5 million Bitcoin, then all of a sudden you start to have just the same issues I think that we are seeing our society struggle with today be perpetuated even further in a digital age, where we're not going to be as reliant, I think, on, how do I say this without sounding like a statist, without certain parameters preventing businesses from taking, I think, advantage of everything that they have hoarded for themselves.
I just say, like, it's kind of, there's nothing we could do to stop anybody from interacting. It's permissionless. So Fidelity's, Michael Saylor, like, the people that understand the value proposition first are going to benefit from it. And when Fidelity gets in, it is 34 million individuals, brokerage accounts, that a lot of times this money's trapped in retirement accounts. It's not like real spot Bitcoin that they're taking, but at least they'll get exposure to the upside if adoption continues and the price appreciation happens like we think. It's better that they have some kind of exposure than nothing. So those are kind of my two initial points. It's kind of like silly because we can't stop them from happening. And then, there's benefits to large players getting on your side. In terms of Bitcoin too, there's like, when you have Fidelity on our side, I mean, that's a large player with a ton of resources, both in DC and from a capital standpoint, to build out infrastructure for Bitcoin to make the system more robust. So I guess those are my two kind of like counterpoints to it. But I do understand that one of the benefits of a large sideways price action and downwards price action is it does give time for more individuals to benefit from it and to benefit from the future price appreciation. So that's kind of like that's a bullish angle to the price action going down. And I think it's a prudent one. I think it makes sense to me. And that's why, a lot of educational efforts are really beneficial right now. If people are keen to listen to it. Unfortunately, a lot of people get into Bitcoin when the price goes up like crazy. That's just kind of the nature of the beast. But if they're doing it now, then they're going to benefit from it. So it's kind of a win-win there.
P, your thoughts as you play with your elephant dick, which, by the way, Sam, we love your elephant dick as well.
Yeah, sorry. I noticed that my Bitcoin is upside down, and it just immediately inspired fear and panic. I sold all my Bitcoin, and then rebought it, took the tax hit, and now I feel silly. But also, yeah, I'm going to take us in a completely different direction. Sam, tell us again, why have you imbibed of the RE20 microphone as opposed to the standard SM7B, which we see Q rocking in this chat today?
Dude,
please relate it back to Bitcoin as well, if you could.
I got nothing. I literally, I asked Alex, who runs Cafe Bitcoin. I was like, I like substitute for him as a host. I'm like the backup. And I was doing the hosting, and I was getting some feedback that I sounded like shit. So we need to change that.
I've been there, brother.
What his thing was, what's his setup? And then I was just like, yo, I'm going to get exactly what Alex says. And they were like, all right, go for it. And so
it's solid.
Now I am what I am. And it's an R20, but
yeah,
RE20.
It's an electric voice RE20.
Cool. Yeah.
Look,
the elephant dick. Yeah, so this is the original color, the sort of like military gray.
Like that color. I didn't even think about getting.
Oh my God, I will trade you this mic in a fucking heartbeat. I regret having this color, and I talk about it way too much on this show. The point is, look, we are contrarians. Sam, I feel a sense of compatriotism with you, because everybody uses the SM7B, and we're using the RE20s, the old school crazy mic that sounds better. Let's go back to Bitcoin
Sound
now.
great, man. You
It
sound
does
great.
sound great. It sounds so good. As soon as we shift camera angles, I'll rip this little sticker off and reverse it around, and it'll look even weirder.
We could take you off camera. We got really used to that for the last 4 days while you just
No,
went
it
AWOL
stays.
on us.
It all stays. So can you just simplify for, as Q would say, the smooth-brained among us, what is the expectation that people have for this potential rate hike? And what are the options available to the Fed? Like, what is the plethora of options they have? And then what are the impacts of the various options that they could take? I think there's probably basically like 2 or 3. Is that correct?
What options are you what are you referring to?
Well, when people say like on a 100 point basis point hike, like what are the options that we think are sort of possible, reasonable, and then what impact do we expect that to have on the markets?
Oh, well,
in a couple sentences. Like, I know we've literally been talking about this in a deep dive for the last 30 minutes.
Can I change your question just a little bit?
Please do.
Where are we talked a little bit about how this is going to be sort of a lagging indicator of where the points of failure are going to be in the economy. Can you highlight maybe 1 or 2 areas of the economy that you're going to be paying attention to? I'll share 2 of my own. Obviously, unemployment, because that's everything that the Fed keeps citing as far as their sort of motivation for a lot of things. And I'm really trying to pay attention to just the housing market in general. That has historically been a nice little leading indicator for us, and doesn't look pretty to me as someone who's been looking to buy a house for some time. And yes, this does mean that the run of Q in his mother's basement is coming to an end.
Yeah. The options are basically, I mean, they could do whatever they want, I guess, but like what the likely options are 75 bips or 100 bips. And the CPI print last week really freaked people out. I think a lot of people expected it to be lower than it was, but it came in higher. And so a lot of people, the expectations for the Fed hike kind of jumped up, and the probabilities increased for the potential of a 100 bips increase. But I think 75 is probably what I would bet. And if that's the case, then, we're going to see continued pressure on really all risk assets, I believe. Right now, really any kind of economic indicator that you look at, it doesn't look good. I mean, last week, for instance, consumer sentiment came in at the lowest ever. Housing affordability is the worst ever. And as you continue to tighten policy, it just puts further pressure on everything, because the discount rate, when that goes up, the way that they kind of value stocks, it's probably going to have more pressure to go down. So if we see an increase in rates, we're likely to see more pressure on the stock market. I expect that to go down over time, especially as some of these economic indicators start to show up in earnings. And so I'm kind of looking at 2 things. Like, I'm also looking at the housing market. I think it's starting to roll over. It has been rolling over for a while. And so there's a lot of different things you can look at. You can look at purchase applications every week. You can look at just the Case-Shiller price index rolling over. I like looking at rents on Zillow. And then the housing affordability index came out last week. And so it was the worst ever, like I said. And so I like to look at all those things. And then as you kind of take a broader picture, it kind of tells you where we're probably heading. And when you look at abroad and geopolitical risks and all kinds of issues going on, it's a bleak outlook. And I'm not trying to paint a rosy picture when there's not one. Cycles are normal, and we're not very used to recessions because of the Fed coming in to bail everyone out every time it's happened. But this is normal, and it's actually healthy for a long-term economy. And so I expect this to be kind of longer than people expect, honestly. And then the other thing I'm looking at is I like looking at the MOVE index, which is a measure of bond volatility, for a couple reasons. It kind of gives you a measure of kind of the risk in the credit markets. And then it also the liquidity in the credit markets. So if it's more volatile, it kind of gives you a sense that the bond market's more liquid. And if the bond market's more liquid, it shows that there's kind of the economy slowing down and there's a lot of risks. And so if we see the bond market start to really blow up and become very illiquid, that could be one thing that could cause the Fed to pivot. But I think maybe that's not coming for a while. Like I don't think that's really coming in like the next couple of months, unless there's some like catastrophic, blow up, like black swan kind of thing. Like that's always a possibility in this uncertain environment. But bearing that, I'm kind of I think things are going to stay like status quo for a while, and we're going to continue to see downward pressure across risk assets.
I'm going to interrupt real quick to just say we have official word that it is a 75 basis point rate hike. So
Cool.
I've lost track now of how many times the market, like the odds of that FOMC calculator that gives us like, oh, it's 75% chance of 75 basis point or 25 for 100 or whatever. I genuinely think that has been correct every single meeting this year.
Yeah, it's pretty accurate.
And I presented this question one time to Dylan and Sam, and it's getting me to a point where I really don't understand why the Fed exists if the market is kind of telling the Fed what it wants to be done and what it's expecting. I understand the history behind the Fed, but the markets have very much taken control over these rate hikes, it seems. Is that an accurate way of depicting sort of what we've seen transpire over the course of just this calendar year?
Yeah, I mean, why does the Fed exist? That's a big question. And I think financial markets have like dictated their policy decisions really since Greenspan started to bail everyone out with the Greenspan put. The Fed has basically responded to financial markets. And so I think that's why, these probabilities, the Fed over the last 30 years, they've just responded to the markets and just listened to them and tried not to piss them off too much. It's been a long time. It's been since Volcker, since they like went against the market's expectations and did what they felt was right with their dual mandates. So I think that's why these like probabilities in the markets and the CME probabilities has been so accurate, because the Fed really does look at the markets like there's an ongoing joke that after these Fed meetings and they announce the monetary policy, that they immediately go back to their Bloomberg terminals and look at the markets to see how they're reacting. So, that's what this like Fed insider said a few months back, and I tend to believe him. So, I just think that it's become ingrained in their decision-making process, and when really it's not really a part of their mandate, but you could say it's a shadow third mandate. So I think that's why the probabilities are so accurate.
We're going to pull up an image now of the FOMC target rates pretty much from 2002 through 2005. And I was just looking at this, and what really surprised me is the 2023 sort of dot plot range. For our viewers, in a second, we will pull this image up. It essentially shows you each of the different Fed members' sort of anticipations of where they expect the rates to be on each of these years. And if that's not the case, Sam, you are so welcome to tell me I'm an idiot on my own show, because if I am wrong about that, I'm an idiot. But it looks as though next year they're anticipating an approach to 5%. And there's no anticipated slowdown until 2024. Mind you, these are forecasts, these are projections that always change. I'm a little perplexed and almost surprised to see such a high number for next year. My best guess is they are anticipating a prolonged level of Fed funds rate. Being at this level will bring inflation lower. And in turn, if inflation can get below the Fed's fund rate, then they will feel confident that their work has been successful and they can slowly begin to lower rates and i.e. pump liquidity back into the markets. Sam, Where did I go wrong? What don't you agree with? How crazy am I? And this is the image we're talking about here.
Okay. Yeah, I couldn't see it before. Yeah, these are just like expectations. So they're usually not that accurate. So,
Fair.
it's like anyone guess. But, I think that's what it shows is that this latest CPI print, it just kind of changed a lot of expectations because before a lot of people thought that they would start to pivot like mid 2023, and now it's been pushed back, and now it's been pushed back. And so what they expect to happen is not just that they'll raise rates more, but that they'll keep it higher longer. And that's where they could run into problems because, like, I don't think the markets can really handle interest rates at these levels for a long time. And that's kind of what these expectations are saying. They're expecting Jerome Powell to raise rates and then keep them at these levels for an extended period of time. And I think as like debt rolls over and they'll have to refinance at these higher interest rates, you really start to feel pain, like in the corporate level, as they try to roll over their debt, and then they have to pay a lot more because interest rates are so much higher. And a lot of these companies are leveraged to the teeth. A lot of these companies are zombie companies. And so they'll really struggle with that if they keep interest rates at this level as they continue to reduce their balance sheet with quantitative tightening. And so it's kind of a double whammy because not only are the financing costs higher, but also they're removing liquidity out of the system at the same time. And so I think that things would break before that. And that's when a pivot's going to happen. The pivot will not happen unless things get really bad. And that's like when people say a Fed pivot's going to happen, it kind of can't happen until something bad happens right before it. Because if things just stay the status quo right now, like they can take this demand destruction and they can take another 10, 15% down on the stock market. But if things get really bad and unemployment starts to spike and all these things kind of bankruptcies start to happen and all these problems start to happen, then we'll get a pivot. And that'll happen if they keep interest rates at this level for a long period of time with these debt levels. And so that's kind of how I see it. It's just kind of each time the CPI prints remains elevated and doesn't come down in a meaningful way, I bet you're going to see these expectations continue to increase a little bit, and they'll say, okay, this is going to last longer and longer and longer. But I just can't see a scenario where they can keep rates at these levels for a long period of time without things starting to get really challenging for these businesses. Does that make sense?
No, it does. I wonder though, and this is your least favorite topic in question, but if you would entertain me for a moment, we do have midterms in less than 2 months now. Do you anticipate any decisions from either Congress or the White House as far as an economic scope is concerned for the sake of just strengthening their case to be reelected? Not in any sort of, this is actually going to help the economy in any way, understanding fully that this is strictly to get more votes, which I'll be the first to admit was definitely a huge implication of their decision to provide student loan debt relief.
Yeah, that's what I was going to say. I feel like they've already done that. I felt like they did that with student loans. And then I feel like they're doing that with releasing the Strategic Petroleum Reserve right now to try to keep gas prices low. So it's an emergency for them because, they need the votes. But really, that should only be done in a real energy emergency. And right now, in the United States, at least, we don't really have that. So, it's bad. There's rising. The gas prices are higher from a couple of years ago, but it's not like we're Europe right now. And they are draining that reserve at a rapid rate to try to, as a political talking point. And that's what you see Biden going, oh, gas prices are so low. They have to have something because everything else isn't looking so good. So, I think those two things, the student loans and the Strategic Petroleum Reserve getting drained, I think that's what you're seeing. And I don't really know if much is going to happen outside of those two things. I think barring some, again, things could change really rapidly in this environment. If something like really bad happened, you would probably get Congress and politicians coming out pretty rapidly saying stimulus checks, like we need this if things really start to break down. But I don't really see that happening before midterms. That's only in what, like a month or month and a half or so. So yeah, I think it already happened. Q.
Fair. I was just hoping for, I don't know, something to really break, because to your point, I don't think we've reached that point of maximum pain, at least on this country. But let's hop on over the pond. We had Putin actually release a statement or give a speech earlier this morning, last night. To be honest, it was delayed a couple of times, so I have no idea when he actually said these words. But it looks like, based on his speech and the translations I was able to read, that they are going to call upon all of the Russian military members who are in reserves to now come forward and sort of begin to join the war efforts. Hearing that Russia is not slowing down these war efforts, given where Europe is in their energy crisis, how bad are things about to get in Europe? What are you paying attention to out of Europe right now?
Yeah, so what I focus on in terms of Europe is this energy crisis just kind of worsens a crisis that was already happening. And it's really the ECB and how trapped they were compared to other central banks. They were the slowest to kind of start raising interest rates. Inflation was already at historic highs in the Eurozone, and they were at negative interest rates since 2014. And then they have a ton of debt problems, specifically in the peripheral countries, Italy, Greece, Spain. And so they're in a tricky situation because they can't raise rates without causing kind of increased risk of a sovereign debt crisis, similar to what happened in the early 2010s. And so immediately when they said they were going to raise rates, you started to see the spreads between the Italian bonds and the German bonds start to really widen, and it really freaked them out. And so that was just when they announced that they might raise rates. And then they went ahead with it. They finally raised rates in July. And then they announced some like emergency program that will unlimited targeted QE to basically plug that hole in Italy as they try to fight the same battle of fighting inflation on the other side. And so those are at odds with each other because they're printing money to keep the yields down in Italy while they try to fight inflation by raising interest rates. And all of this happened while the energy crisis is going on. And when you have the energy crisis going on, you have the governments of Europe subsidizing that. So they're printing money and giving it to their citizens to help them with the costs, the increased cost of their energy bills. And you can't really blame them. Like, these people are really struggling, and they're trying to prevent a string of bankruptcies from happening and something really, really much worse from happening. But they're at odds with the central bank, who are trying to combat inflation. And so this is the problem with Europe, because you have a monetary union, but you have governments that have disparate economies and disparate fiscal policies. And so even in the last, 2 weeks, I've been trying to keep track of all this, but you had the UK government freeze gas and electricity bills. So that's till 2024. It's estimated to be $180 billion, or like 6% of their GDP. And so they're spending. You have Germany, basically combined, they printed 95 billion euros to help their citizens and some of their businesses. You had Sweden and Finland basically provide guarantees of 33 billion euros to utility companies to prevent defaults. You had Switzerland come out and save 2 of their energy producers with about $7 billion euros. You had Austria. They're I think that's 500 euros per year they're giving till 2024. That's going to cost them about 4 billion euros. You had Dutch come out the other day, do something similar. And then you had Greece come out the other day, and that's going to cost another $1 billion. So all of these governments are spending money at a time of historic inflation, and at a time when the ECB is trying to raise rates to fight this inflation without causing a sovereign debt crisis. So I don't mean to laugh. It's just it's a really tricky situation, and it's terrible, man. And I see it as the weakest link in the whole fiat system. And so that's why I've been like really paying attention to it. And then this energy crisis that has really gripped the financial community, and for good reason. that's just kind of added to all of these problems. And so, Joe Wisenthal, the dude from Bloomberg, I think he said it best. He said, money printer go burr, so households don't go burr. And I think that's what's happening going into the winter, and it puts them in a really difficult situation, especially if you're the ECB.
I want to just say, because I don't think your laughter was like in jest or making fun of, but like this is genuinely, it's such a scary conversation to have, that this isn't a random developing nation that you have never heard of before. This is a whole continent of Europe where, let's be honest, the vast majority of white Americans can trace their ancestry back to that continent. And we are, like, I'm almost curious what you think, like, who is really at fault here? Because on the one hand, you have the citizens actually asking for this. You have the citizens asking for the subsidies, asking the government to step in and save their businesses, save their energy bills from being too overwhelming. While at the same time, you have multiple iterations of the French government, the Boris Johnson led UK government, various other governments all across Europe were offered opportunities to sit down and end the war with Russia and Ukraine, and instead opted to join the US side to continue to add fuel to the fire. And now they're almost seeing their citizens say, hey, wait, time out. We actually can't afford to be in this war because I need to stay warm. And do you think there can be a breaking point and a disconnect in Europe between what the citizens want and what their government leaders will inevitably do? Or do you think their government leaders will end up caving, for better or worse, and subsidizing energy costs and trying to make whatever happens within their own sort of jurisdictions appeasable and tolerable, while still propagating this war over in Eastern Europe?
Yeah, well, I think ultimately the biggest risk for them is mass, political turmoil, chaos, and civil unrest. And so the civilians, there's already been protests, there's been burning of electricity bills across Europe. There's a whole campaign in Europe or in UK called Don't Pay, I think Don't Pay UK, that already has like tens of thousands of signees that they say they're not going to pay their electricity bills October 1st when they're supposed to spike hundreds of percentage points. So this is already happening, and I think governments will bend the knee to their citizens because that's the biggest risk, is civil unrest domestically. But then they'll have to turn their back on Ukraine, or they'll just try to do both at the same time, and just, even though the finances don't make sense, they'll try to print money and do this. That's why all of this kind of leads to the same place, which is just currency devaluation of the euro. And so I think that is the big risk. So you're already seeing it. You're already seeing kind of civil unrest and protests, and these European civilians, they're wondering how we got here, but really it's just poor leadership. It's kind of poor energy policies over the years, not considering security and resiliency in a peacetime where leaders weren't really considering that. But if there's one like benefit of all this, it will kind of start to shift that mindset towards that, start to shift the mindset sort of, okay, yes, I guess sustainability and, all these like inefficient green energies, like we also need, nuclear might be a good option, or, it'll kind of shift the mindset, because sometimes you need a crisis to actually wake people up to these things. And so I think that's another thing. There has been so much doom and gloom around the Europe situation for this winter. Like, oh, this is it. Like, it's not going to work. I think it was like way too much, that the pendulum shifted way too much that way in terms of general discourse. Like, this is only doom and gloom. Yes, it's going to be really hard. But I think there's a probability that they get through this winter and that they band together, and people are resourceful. People are strong. The human spirit's strong. But the problem is I don't see how this changes into the summer or next winter or the year after that. And so that's kind of where I'm thinking. It's like not so much like the next few months. It's that these dynamics in place and these relationships, they don't seem to be improving. And so it's hard for me to see a scenario where this doesn't continue. And if that's the case, then it's going to be more money printing. It's going to be more subsidies, and it's going to be more devaluation of the euro. And so, because it just takes years to get these things back on track in terms of energy policy and building out the infrastructure. And so we could be talking about years of these elevated energy prices, which would just add to the inflation pressures and make it more difficult for the ECB. So, that's kind of that's what I'll say about that.
I think just, creative ways of staying warm are also viable options, but I don't think P agrees with me anymore because he told me not to say that. But I still think, oh, okay.
Yeah,
Okay,
I was
see you.
sorry. I was just lighting my head on fire on the side, just trying to
Which
figure
I
out the
think,
right
like,
moment.
like, why couldn't Europeans just do that? Why can't they light themselves on fire to stay warm this winter?
Q, I feel like doing that is not actually a viable strategy. I feel like it only gives you like maybe 5 seconds of warmth and then it starts hurting and then you have to put it out. We're talking about much larger, how do you stay warm as a group of people over a period of time
I mean,
when you don't have enough, resources to do so.
it seems like this would be a great idea to have alternative energy sources or be energy independent, but no, we decided to listen to a 16-year-old girl about how to handle our energy infrastructure in an entire continent. Like,
Yeah, oh God. You know
I
exactly
will.
which exactly which buttons to push to get me all riled up. I don't know, Sam. I'd love to hear your thoughts. Like it continues to blow my mind, as I've said before on the show, that the average person across most of the world is absolutely convinced that nuclear energy is not only the bane of our existence, but definitely like a tool of Satan to mutate the the creatures of this magical planet, and also to feed the fat cats, quote unquote. I just don't understand, because it is actually such a clean and important way of generating power as we continue to increase the size of our population. I'm just flabbergasted by the effectiveness of the PR that has been put out there. I'm curious if you have any thoughts on that.
Yeah, I agree. I mean, I think I'm a big nuclear proponent. I think it's a dense energy resource and it's reliable. Could be a reliable baseload. And I think the anti-nuclear, I mean, it stems from like Chernobyl and Fukushima. They're still they see these things and it's bad, but also nuclear, like, it kind of disrupts the oil and gas industry and the ESG renewable industry. So it doesn't really have much lobby behind it, not a lot of money, because it kind of disrupts both of them, right? I mean, like, in a way.
Oh, interesting. You're saying like oil and gas is like deeply invested, which totally makes sense. Of course, you got to follow the incentives.
Yeah, and like oil and gas, there's a lot of benefits of oil and gas, like in our products and things. So they wouldn't like go away, but it'll definitely eat into their profits to have this like endless base supply of energy from nuclear. And so it just seems like, nuclear has no friends, basically, in DC.
So how do we get those friends? How do we create, and maybe if you can just do like for our audience, like a brief summary of like the benefits of nuclear, the unfair characterization that it gets, and why it's all bullshit.
Well, I'm not like a nuclear expert, but from my understanding, it's just it's a way to have actually clean, I guess, zero carbon energy resource that it provides a reliable base load. So it's not intermittent like wind or solar, which obviously sometimes it's sunny, sometimes it's cloudy, sometimes it's windy. Nuclear allows you to have that base, which is really, really important to connecting to the electrical grid. Like, you need that base load. And so nuclear does it in a way that's really efficient and clean. And like people get upset about it, I think, because of like the waste and all these things. But from my understanding, that's kind of way overblown. Especially when you compare it to some of the waste in these renewables and as well as oil and gas. So that's kind of my short thing. I haven't like dug super deep into nuclear. I'd like to one day. That might be good. But from my understanding, it seems like the best alternative we have and one of the most dense energy resources we have available to us, and we're just turning our back to it. And it's strictly from like political reasons or money reasons or just not understanding what it is. Basically propaganda.
I would agree with that. I mean, I think there's a very important thing that, Sam, you've highlighted. We talk a lot about it. It's just who has the ears of the policymakers in DC. And unfortunately, right now, there's just not there's not enough money within the nuclear system itself to allow then for someone to be a spokesperson on their behalf. I almost feel like this is almost like the perfect intersection of Bitcoin and energy. And it almost feels like the Bitcoin Policy Institute, which is more or less advocates of Bitcoin and its technology who speak to different policymakers in DC, this should be a part of their docket. So to the founders of that, I hope you're listening, because if you're not, I'm just going to yell at you for not listening to this.
Yeah, like
do that.
I also I would say I think there's a ton of money that is required to build them too. So that's like a huge point of it too. There's a lot of like fixed costs
and water.
Yeah. So that's another kind of like hold up, I think.
I do want to I want to ask this because I have a very aggressive bias when I bring up this, and I need someone to balance it out a little bit, Sam. So sorry, you've drawn the short straw and you have to balance this out. I've been pounding this drum since the beginning of this year that Xi Jinping and Vladimir Putin have been sitting down with Iran's president. And while we don't know what those conversations have been, it doesn't take a genius to surmise that two adversaries of the US meeting with a president who is the leader of a country that has been under sanctions by the US are most likely asking this president, how have you guys handled sanctions? How have you guys survived for as long as you have under Western and the US sanctions? And lo and behold, shortly after that, Russia has now been put under sanctions. We're witnessing some actions being taken by China against Taiwan. And meanwhile, behind the scenes, we're seeing deals get made between Saudi Arabia, China, Russia, Turkey to release and sell their oil to the European markets, as well as break and destroy the petrodollar and introduce a yuan dollar, Russia accepting Bitcoin and other cryptocurrencies. You had Iran also announce that they're accepting cryptocurrencies, primarily Bitcoin, to settle international trades. We're starting to see the slow end of the strength of US sanctions. And I'm curious what effect you think this could have on a global stage. Let's first start on the energy side of things. Obviously, countries like Saudi Arabia, Iran, and Russia hold vast amounts of oil and natural gas, as well as the other OPEC nations. But between Iran alone has over 150 billion barrels of oil. For context, again, OPEC Plus manufactures about 20 to 25 million barrels a day. So that's a significant amount of oil that Iran just has that it could introduce to the market. All that has to happen is sanctions go away and oil prices go down, cost of gas and electricity goes down. This really feels like it's turning into a US sanctions versus the rest of the world argument. There's a degree of that, but now my bias is starting to show. So I'm going to mute myself and unpack and rip apart everything I've just said.
Well, the economic sanctions and the seizure of Russian FX reserves. I feel like it was kind of a knee-jerk reaction. It's like the weapon of choice that the U.S. has used over the last decade or so. There's a book called Treasury Wars that's pretty good that kind of goes over the history of sanctions and how the Treasury has been used as an arm of basically warfare for the last decade or so. Now, what I think makes sense is that one of the consequences of doing that is it basically pushes our adversaries together. It incentivizes them to work together. And so you got China, who makes a lot of things, who's been getting oil on the cheap from Russia. Same thing with India. And they're like, this is great. As long as the U.S. doesn't sanction us, we're getting some cheap Russian oil right now. This is fantastic. And then Iran's just a part of that, right? So Iran has been like, hey, you guys got sanctioned too. Welcome to the club. And so now these are resource-rich countries who we're kind of driving together through our political actions and then the sanctions. And so you got to be really careful and think about the long-term consequences of these actions. And then in terms of the sanctions, as the world moves to a more multipolar world, multi-currency world where you start pricing in these goods in different currencies, it will make sense that the sanctions will become less effective. But I think right now people are kind of underestimating how effective they are on Russia. I think the spike in oil prices has caused a trade surplus and brought in a lot of money and kind of helped them keep afloat. But the longer these sanctions go on, I think the more damaging they could become on the Russian economy. And then, same thing with Iran. Like Iran, they're not doing well right now. There's like mass civil unrest. Actually, came across my timeline this morning. Since they've been under sanctions, they've had rising unemployment. They've had increased inflation, drop in world trade, drop in oil exports. Their economy shrunk. So it has been effective in the past, and I think it will continue to be an effective tool, but it will lose its power as these countries band together and start to price goods in different currencies. And that's the natural reaction to these things. Every action has an equal and opposite reaction. And that's what we're seeing happen. And that should wake people up, because if these superpowers, or at least China and then Russia, and they team up and become more friendly towards one another, and then you have Iran, which is, a ton of oil resources, you can kind of see how them banding together would be a pretty big, adversary. It would be, they would be a powerful group to kind of battle against, for lack of a better word. And so these are kind of just the natural consequences. And I don't know if Biden or the administration really thought through this. They did it so fast. Like right when it happened, they immediately sanctions, seized the FX reserves. And now when they see these things, they're like, hold up, So that's kind of how I see it. I think it's a lack of long-term thinking, which is kind of like a general problem throughout the fiat world.
Well, you mean they don't have long enough time horizons? I love how.
Yeah, it's the money.
Can we talk about how P looks like he's uncircumcised right now?
Yeah, I thought I would look way cooler with my hood up, but I was horribly mistaken. But now I just have to roll with it. I feel like I brought this on myself, and it's my.
I'll join you. I'll make you feel.
You look so much worse. You look so much worse than I did.
You look honestly, as bad as you look better than I did with that.
Yeah.
Sam, I gotta correct you because I just saw that. We're gonna announce that breaking news right now. It's pronounced Iran. We're gonna unpack this though. Breaking news that Jesse Powell, the CEO of Kraken, is apparently stepping down.
Holy shit! Really?
Yeah.
That's interesting.
What's the justification for that?
This is a developing story. We're gathering more information, but I just wanted to sort of pass that headline through, I believe, if I remember the source, it is, oh my God, the
Wall Street
DB,
Journal.
it's
Wall Street Journal is reporting it. Okay, so before I give my insane conspiracy theorist, Lovecraftian interpretation, Sam, what is your thoughts? Without knowing anything, I want to hear your, like, don't do any research. Why do you think Jesse Powell is stepping down as CEO of Kraken? You get extra points for the more deranged it is.
Like, I have Kraken's such a weird company because they're like, they do shitcoins and they're a shitcoin casino, but then Jesse Powell, he's been a pretty good steward of Bitcoin. And when he goes on news, mainstream news shows and stuff like that, like he knows what he's talking about. He's a Bitcoiner, and I believe that. It's just kind of, it always confused me that it's a huge shitcoin casino. He also supported Lightning. Like, he does a lot of things for they even did proof of reserves, I think, which was cool. But so I thought Jesse Powell was actually a good leader, especially when you compare him to, I would say, his other competitor, Coinbase, and Brian Armstrong. I think Jesse Powell was a much better advocate for Bitcoin. And Binance. Like, when you compare Kraken, Binance, and Coinbase, Kraken does a lot of things better and a lot of things more right.
Wait, let's dig into that though, because I have like basically 100 and maybe more CZ bots that are just replying to everything I post on Twitter. What about
bots?
I mean, all joking aside, I think it is actually an interesting topic. Like, all right, I'm gonna put my hood down. It's too much now. Ugh. Sorry, give me a second. What is it about Kraken that is, like, when you say that they're doing a better job of being stewards, or Jesse Powell specifically, what does that mean to you?
Just kind of like that they support Bitcoin developers. They've built Lightning functionality before everyone. They did proof of reserves. In terms of the messaging, their research is top notch that they put out around Bitcoin, around Lightning. They obviously do other stuff in other cryptocurrencies, but they do a lot more for Bitcoin specifically and education than all those other ones combined, the Coinbase and Binance. I mean, I've dug through Coinbase's entire research and blog website, and it's garbage compared to Kraken. And then on the, I just think about this one interview that Jesse Powell did, and somebody asked him, it was like Fox News or Bloomberg or something, and they asked him, like, where's Bitcoin's price going? And he was just like, infinity.
And you were like, I am all in on Jesse Powell.
He's just like, infinity. And then she like looked at him, and he just like looked back, and I was like, all right. Like that. So that's kind of what I mean, man. They kind of all about like the free market, and we'll let people decide. And I think they just kind of developed into this shitcoin casino. They're one of the oldest exchanges. They haven't really suffered like a major hack or anything like that, which is good. I don't know. They do things as best as you can, I think, if you're gonna get into the shitcoin casino game.
Fair enough.
I want to ask though, is there a degree of like Nick Carter and sort of his claims that Bitcoin focused or Bitcoin only companies cannot be profitable in the future? Mind you, you're talking to 3 people who work at Bitcoin only companies.
Totally unbiased.
There is a heavy bias in this, but like genuinely, like there is a degree in which Kraken and Swan overlap and are competitors. However, with Kraken offering the shitcoin casino that Swan does not, I'm just curious if there's a degree of truth baked somewhere deep in what Nick Carter said, that if all you care about is making money, there's more money if you are engaging with the broader crypto ecosystem than just being Bitcoin focused.
Well, I think that's like completely true that there's more money in the shitcoins. I mean, that's like, can't really even argue that. There's the amount of money from crypto VCs compared to like Bitcoin only companies, the amount of funding, it's ridiculous. And they make money because of all the marketing and NFTs and trading that they promote. And so in that sense, yeah, they make more money. I don't know what Nick actually said, but Bitcoin only companies could definitely be profitable. It's just maybe not as profitable as the shitcoin casinos because there's kind of like a moral aspect to it. Now, I also think that Bitcoin companies will survive because we are dead set focused on one thing and doing it really well. And we think about all like the time suck that happens on these other companies that offer all these different coins in terms of their customer service, in terms of what they have to build to support these other cryptocurrencies, the educational materials that they have to focus on. They just get spread so thin, and it's such a time suck on their resources, on their time and their resources to support all these cryptocurrencies. And it makes it so they can't really do Bitcoin that well, even though Bitcoin still remains a majority of their revenues, like trading Bitcoin compared to these other shitcoins. They can't like focus on it because they have to focus on all these other ones that are actually a waste of time. And I think long term, the amount of compliance costs that'll come on these casinos that list these tokens will eat into their profits like crazy because it's a long-term game. And in terms of the regulatory risks that they're taking by listing these questionable securities, whatever they are,
Whatever they are. That was a very generous characterization.
I know. So whatever.
That's how you really feel.
Yeah, the amount of compliance costs they're going to have in the future and risks. I mean, these are trade-offs that are made from the very beginning. And I think when you're a Bitcoin-only company, you can do it really well. You can be experts in Bitcoin, focus all your attention, give better customer service, build products specifically around Bitcoin. And for that, our clients like that. And so we also attract clients that are Bitcoin only. It matters to them that we are only Bitcoin only, like from a moral standpoint and from what they believe in. And I think more and more people will come to that. Not only from the information asymmetry, like more people will learn about what Bitcoin is and they'll appreciate the mission, but also as they get burned in shitcoins, they'll like hold a grudge against these platforms that sold them, whatever, cum rocket, and then they'll come to a Bitcoin only company because they'll be like, all right, these guys were actually had their best interests in mind, and we're just trying to teach people about Bitcoin and get people to take their own keys and all these things. So that's anyone that So
do you think anyone that quote unquote invested in Cumrocket actually was like, this is a solid investment. I'm here to help people for the
dead in
children.
the eye and tell me that he thought Cumrocket was going to be like the next big thing.
No, but
dead in the eye.
Yeah, of course. Your friend's an idiot. I'm sorry, but the question is like, do you think there's anyone who is like, I'm buying Cumrocket, who is like, this might be the future of finance.
Yeah. Well, maybe. I mean, those are the sorriest ones, but I think most are just like, this is the next Doge. This is going.
Well,
yes, my hands smell like burning hair right now. I just want
to. That's your own fault. Like, I give you no pity and award you no points for causing yourself pain and suffering. Like, to be honest, you sound like a shitcoiner who's mad he got rug pulled.
I know.
After being told.
I'm here shitcoining by letting my hands on fire off camera, trying to get the perfect shot. Meanwhile, all you guys get is like some like bullshit. Sam, I want to ask you a serious question. Marry, fuck, kill Jerome Powell, Janet Yellen, Augustus Carstens.
Augustin Carson's. That's the last one.
Yeah.
Christine Lagarde.
Yeah, Christine Lagarde you can throw in there as like a fourth option if you want.
I definitely marry Jerome Powell.
Yes, you nailed it. Good. That is the right answer.
Out of all those. I definitely. I guess I'd fuck Jenny Yellen. Probably kill Carstens just because I'm a straight guy. But honestly, I really, really dislike Jenny Yellen. I think she's like the epitome of failing upwards.
Janet Yellen or Elizabeth Warren? Who do you hate more?
Jenny Yellen.
Interesting. And when you say like epitome of failing upward, I mean, like, is there any other way to be a politician? than to do something wrong and somehow still get positive credit for it?
No, I mean, this is actually, I get really pissed off about the lack of accountability, but in general about.
Let's go. This is my favorite thing to talk about. Like,
So wait, before we shift over to like a real thing, I just want to acknowledge like you fucking nailed the answer to that question. You took a very serious question and you answered appropriately. Well, way to go. Let's talk about accountability.
Well, I guess I'm more talking about central bankers than politicians or economists in general. There's no accountability. You know, you can be so freaking wrong, and it's like nobody cares. They just forget about it after 3 months. But I don't forget about it, and I've been keeping track of Janet Yellen, what she's been saying, and I've read books in the past from when she was the San Francisco Fed president, and how freaking wrong she is all the time. Like, she is batting like, I don't even know, under one. I don't even like, not 300, under 100. And then she's like suddenly fails upwards to become the Treasury Secretary, like literally the most important role in terms of like managing our country's finances. And it's mind-boggling to me. It really is. But it just shows that this is more about not competence or the ability to do the job. It's more about connections and whether she's going to go along with what the politicians want. It's not about like, yeah, she's going to be really good for the economy. It's more like she's going to be really good for this administration. So let's get her in here. And so I just have a really big problem with Janet Yellen. She's done a lot of harm. A lot of things have where she should have been on it. So San Francisco Fed, perfect example. The housing crisis like happened in her backyard. It started kind of in California, in San Francisco, and she's the one in like 2005, 2006 saying that everything looked fine. She's also a labor economist, and so when things were going over in the recession, she'd kind of calm everyone down, say like, no, labor's strong. And then suddenly unemployment spikes like crazy to the highest it's ever been, and again, then she becomes the Fed chairman. So that's what I mean when she says she just fails upwards. But she has great models apparently, so they just love her. So anyway, that's my Janet Yellen rant. Not a fan. I think she's a moron, and I think she needs to retire ASAP because she's doing a terrible job. And that goes for all these old politicians and old central bankers.
I was about to ask. I was like, wait, time out. There's a lot more than just Janet Yellen.
Yeah, just please retire. Like, go play bingo. Go chill out. Go drink some sweet tea. Like you thanks for your service.
Crawl under the porch and die like a hungry ass old person. I get it.
So
I mean, there's a good life to be had. All your friends are doing it. Just go chill out. You don't need to be in charge of everything right now.
So I actually disagree with that. None of their friends are doing it. Their only friends are in DC and they're all friends with each other. So it's like, this is the only time we have to hang out with one another. Because if I don't get reelected, I'm never going to see your bitch ass. Like, genuine, real conversation that Nancy Pelosi has had with Mitch McConnell is, Mitch, my guy, we can't hang anymore if I don't get reelected. So make sure the Republicans either put forward like the worst candidate imaginable so I get reelected, or just don't put anyone at all so I get reelected and we can keep like fucking around in DC. But like my short list of everyone who needs to be retired, and then like you guys have seen the Christopher Nolan Batman trilogy, right?
Mm-hmm.
It's over 10 years old. So if you've never seen it and I spoil something, I don't really give a fuck. But you know that scene in the third one after like, Gotham like gets destroyed by Bane, and you have the Scarecrow character who is now like returned as the judge, and they're sort of trying all of these people. I want that. I want a fucking like crazy apocalyptic type of jury and court case where people like Janet Yellen and Elizabeth Warren and Nancy Pelosi and Mitch McConnell and Lindsey Graham and Ted Cruz and Chuck Schumer and just all of these deplorables who have leached off of our tax dollars for longer than I've been a fucking alive. and have become millionaires by leeching off of our tax dollars. Like Dianne Feinstein is 108 years old and somehow still running for re-election in the state of California. I am only going to vote for one position this year, and it's going to be to make sure she doesn't get reelected in this fucking state. Because my God, how does a woman who has been living in Washington, D.C. for longer than I've been alive know what I need as a citizen of California? She doesn't. She knows more what the people who live in the not a state of Washington, D.C. know than she does what the people in her own home state need and want. But I don't know. I just hate old people, I think.
Oh no, hey.
Well, that was a bold, very blanket
like
statement.
old people. I
Like if we get Joe Biden v. Donald Trump again, two fucking senile 80-year-olds running for president, I'm going to rage quit the U.S. I will rage
God.
quit.
Yeah.
Well, I people say like voting doesn't do anything, like vote with your feet, and I kind of understand that. It's just when the older populations, the voting bloc just votes more than the younger one, like, and so they're gonna keep voting in the people that are gonna be on their side with things in terms of not reducing entitlements, and the older bloc will always vote in their own generation. So what's good? I mean, the younger generation could really, if they just went out and voted more, maybe we could vote these old people out and then maybe get some like term limits or something. But I just, to me, it's like, it's insane to me because a lot of them, like, just, I don't wish this on any of them personally. I may disagree with them, but like a lot of them are going to pass away like soon, just like by nature. And so how could they care about like what's going on? Even like these bills that they're passing nowadays, like they might not even see the fruition of them. And that's just like mind boggling to me. And so you're not up to the times. You don't probably understand technology or anything about where things are headed because you don't care. Cause I mean, you're not going to be there. So, I just think there's something very wrong with it. And I think there needs to be term limits. And I've worked with the old people, man. And like, it's true that your mental capacity goes down.
Yeah, I feel that on working with old people with no accountability who just do what they want and then make the young people deal with the consequences of their action. But there's a degree of almost foolish optimism I think I've concluded when it comes to the idea of introducing term limits, because really what we're asking is the powers that be to inhibit their own powers and put sort of like, oh, actually we're way too powerful, so I'm going to give up some of my power and control by introducing this. Or like another thing I love to point out and cite while we talk about inflation a lot on Bitcoin networks, and you hear a lot of conversations about what the fuck happened in 1971 and gold standard and US becoming a global reserve currency. The thing I want to highlight and point out is that members of Congress vote themselves. They get to vote on whether or not they get a raise. And let me ask you guys a serious question. If you were asked by your boss, like if David Bailey just asked P and I, hey, do you guys think you should get a raise? Let me tell you, DB, you do not pay us nearly enough, first off. Second off, thank you so much for this opportunity. I love it. So grateful for it. Third, of course, I'm going to vote for a fucking raise for myself. And guess what? Congress has done exactly that. Since the end of World War II, they have only ever kept their salaries the same or given themselves a raise. The last time they actually took a pay cut was during the Great Depression. So not even during the 2007 great financial crisis, not even during the fucking COVID recession, did Congress sit there and say, hey, maybe we should actually not be taking so much tax dollars and putting them in our own pocket. Now, mind you, I want to ask the other side of this coin. In theory, these are people who are leading the charge on the global stage and making policy decisions for the whole country and quite possibly the whole world as a result. Should they actually be paid a premium to be making these type of decisions, knowing well that they haven't really made the right decision in 100 or I guess I'd argue 100 years was the last time we made a right decision in this country.
I'm curious.
No.
What's that right decision?
No, I'll say 50 years, 45 years ago. Civil rights movement.
JFK.
LBJ,
Yeah.
technically LBJ.
Yeah.
That's the last right decision I think this country has made.
I'm just trying to think about another one.
Please, no, like stump me. Like between 1971 or 65, I believe, 66, somewhere in the 60s, that decision was made. Since then, not a single decision our government has made is actually good. And if we want to, I don't know, hold our government officials to a certain standard, maybe we just fucking cut their pay.
Yeah.
Fine. You want to stay in power forever? Well, guess what, buddy? You only get the federal minimum wage.
Yeah, we'll see how many people stay in office then. But I actually don't know. Like, can you do that? I don't know how that. You said they vote on it. Would that have to come from like an executive order or something? Like,
but
how
see,
would
this
that-
is the issue. If there's an executive order that went down, say Biden said right now, hey, you can only serve 2 terms in Senate and in House, and your pay is now capped at $100K a year. Any executive order can get overturned with a 75% vote. And again, I ask you, do we really think the people who get to decide themselves, oh, if I vote nay on this decision, I get to keep my salary and my job the way it is? Or if I vote for this decision getting made, I have to take a pay cut and I'm probably going to have to find a new job very soon.
Well, you'll probably get people who end up in office who actually care about it. So yeah, I think that would be an outcome if it's not about money. Yeah, unless they're just literally power hungry, which could be equally bad.
Which I think is a lot more of them than we want to admit. Sam, I know you have a hard stop. I want to give you the final word and comment on just anything we haven't yet discussed. Shill all that you need to shill and tell everyone how they can keep up to date with your witty banter on the Twitter sphere.
Yeah, I would just say, I just expect things to continue to be kind of put pressure on the price of Bitcoin, just the general macro. I don't know if we've had like the liquidity event that needs to happen in the broader markets to bring on a pivot or anything like that. So I think people should just expect kind of the status quo and continued volatility. So that's just what I'll say about the market. In terms of like myself, I work at Swan, so you could go check out my stuff on the blog. I write for our Swan Private. So Swan Private's just a concierge service for high net worth individuals. I write the research that comes out every month. If you're interested in that, we do all kinds of services. If you have a trust, retirement accounts, anything, if you're a business, you can check out Swan Private, and you can hit me up. My DMs are open on Twitter at Sam Callahan, SamCallah. And I just got to give a shout out to, Swan's throwing a conference, the Pacific Bitcoin Conference in LA in November. I think it's going to be a good time. It's going to be a party. We got some great speakers. It's a good time to get out in the warm weather in the winter time. So you can go check out that if you're interested in maybe purchasing a ticket or anything. And yeah, so that's my thing. So you can check me out. I'm on Twitter all the time. So just Sam Callahan is my Twitter handle. So
Sam, we're going to hang out in LA.
Yeah.
Dude. I'm looking forward to hanging in LA. It'll be fun.
Yeah, man. It'll be a good time.
Thank you, as always, for joining us. Ladies and gentlemen, it is that time of week. We are going to cut to a commercial break in just a moment for a new episode of Fedwatch. I do want to give a little caveat heads up. I'm going to go and hop on over to Twitter Spaces. The FOMC press conference, I believe, has started or is about to start. And then from there, we will have an ongoing discussion on Twitter Spaces about this. Yes, the FOMC meeting press conference has kicked off. There is the Pacific Bitcoin Conference. I do want to remind anyone over in Europe that the Bitcoin Amsterdam Conference is kicking off on October 12th. Lock in your tickets now. Use promo code BMLive to get 10% off. Ticket prices go up on Friday, so lock in those tickets now before they go up. We'll be back after this with a new episode of Fedwatch.
What is up, everybody? Welcome back to another exciting episode of Fedwatch. Today is FOMC day, so we should have a very good show. My name is Ansel Lindner. I'm here with my co-host CK, but we also have a guest today, editor at Real Vision, Andreas Steno. How are you doing today?
Good. Thanks for having me.
Awesome, man. I ran across your stuff a couple months ago on Twitter, and then you really piqued my interest a few weeks ago when you were trying to talk sanity into the European energy crisis. So I had to have you on to talk about that. But being that today is Fed Day, I guess we should start with that. What's your takeaway of the 75 basis point hike? Is it what you expected?
Well, more or less, yes. I mean, the Fed is sort of crystal clear today. They don't want us to bet on a pivot this year, at least. If you look at the updated dot plot, so the median projections from the members of the Federal Open Market Rates Committee, they essentially tell us that they intend to hike interest rates all the way through this year. I think the median projection is now between 4.5% and 5%. Most of the members leaning towards an interest rate above 4.5% by year end. So, I mean, they quite frankly tried to tell us that we shouldn't bet on a pivot. They've quite frankly tried to tell us that we shouldn't bet on higher levels for risk assets. So they're trying to bring asset prices down. Whether they will succeed is another question. But at least the intent is pretty clear from them today.
Yeah, awesome. Yeah, I forgot to give you time to introduce yourself, man. I just got right into the content. So, Andreas, can you tell us what you do with Real Vision and tell us about your newsletter?
Yeah, I mean, I'm born and raised in institutional banking. So I've been heading strategy teams in various Northern European investment banks for more than a decade. But now I'm contracting with both Blockworks and Real Vision. I'm hosting the daily briefing at Real Vision a couple of times a week, and then also hosting essential interviews behind the paywall at the Real Vision platform. And then I have my own Substack called Steno Signals, where I try to sort of cut through the macro noise, in particular on the energy front right now, because it's very needed. I've seen so much misinformation on this European energy crisis. Just to say it up front, it is a crisis, but I've seen so much misinformation anyway. And therefore, I've decided to spend most of my time on that recently.
Awesome. Okay, now getting back to the Fed stuff. You were talking about the dot plot and about 4.5%, and they want to get to the end of this hiking cycle, but they're saying there's going to be an end, right? So I always think that, okay, maybe they're not pivoting now, but they're telling us they will stop eventually, and they're telling us they will pivot eventually. And so, that isn't that what the market is sniffing out? What do you take, or what's your take on that?
Well, I think you're right, given that equities have started to rebound during the press conference with Jay Powell. The important point here is obviously whether the Federal Reserve will keep monetary policy tighter than average for long, right? And if we look at the dot plot, they send a very clear signal for the short run, but for the sort of medium-term projection, it's more like a wobbly signal, I'd say. They intend on bringing the interest rate lower again because they clearly find themselves to be in what they call restrictive territory right now. So a rates level that will sort of decrease the activity in the overall economy. And they don't intend to stay at such levels for too long because they know that's very harmful. So the question is whether they will succeed in bringing asset prices down with this message, because I essentially think that they want to bring asset prices down even further because it's the simplest way to kill inflation.
Okay,
Andreas,
so you're saying, go ahead.
All right, no, go for it.
I was just going to say, so you're saying that asset prices, they're targeting asset prices as a way to target CPI. What do you think about the CPI being at close to 0% for the last 2 months here in the US, at least headline? That's not core, of course, but what's your read on CPI and peak CPI?
Well, I've probably tried to call the peak in CPI a couple too many times this year, but if I look forward on US CPI, I feel very convinced that in 6 months from now, all of the so-called inflationistas, they will be much less loud than they are right now. The reason being that some of the price surveys that we conduct among SMEs in the US, they point clearly downwards now. So the pricing power of corporates is worsening right now as a consequence of a weaker economy, as a consequence of larger inventories and stuff like that. The main culprit in the consumer basket right now is housing, mainly due to the methodology. So the way that we measure housing costs in the consumer basket is, if you ask me, extremely outdated. It kind of measures the development seen in house prices through 2020 and 2021 with time lag, as we only ask 1/6 of the overall target group of the shelter cost category in the consumer basket every month. So it simply takes time before that survey actually catches up to the reality. And therefore, I'm pretty convinced that this is sort of the only category that the Fed will now need to bring down. And if we watch the developments in house prices right now, I'm fairly certain that in 12 months from now, this shelter cost category, which is the main culprit right now in inflation, will be at much lower levels than what we see today. So yes, I dare to call the peak, and I actually think we have peaked already, to be honest.
Andreas, I'm kind of curious. For me, I find that there's this strange contradiction between CPI increasing, maybe because of inflation, but definitely because of supply chain destruction, conflict, that kind of thing. And I find that there's like this contradiction with trying to solve that by increasing rates. Obviously destroying demand and making it so consumers can't consume is definitely a way to reduce demand on scarce goods. But I guess, can you talk about that kind of like contradiction between central bank activity and what's actually happening in the economy?
Yeah, I mean, if you ask sort of a textbook economist whether it's a good idea to hike interest rates due to a supply shock, the answer is no. And I frankly also find it to be a wrong path to pursue, given the amount of supply issues that we're faced with right now. They're getting better, but they're still around, right? The issue is that it's sort of the only weapon available to the Federal Reserve, right? They cannot do much to support the supply side in any way, right? So they can only sort of try and contain the demand side, which is why they simply have to do that, given the incentive structure that we've given them. If you look at the incentive structure of a central banker, if inflation runs 5, 6, 7 percentage points above the target that you've been given by the politicians, then you don't really have a choice, right? You need to do whatever it takes to bring inflation back towards that mandate, even though you're sort of fighting a battle that you cannot really influence too much, given the weapons that you have available, right? So I get why they do so, given the incentive structure that we've given them, but I don't find it to be the right medicine, or the right cure, rather.
Yeah, that's a great point. And on the supply side of stuff, there is obviously a big difference between the challenges that Europe is facing and the challenges that the US is facing. Europe seems to be behind the US in how fast they're hiking and stuff. So can you, for a lot of us in the US, and we don't really follow the ECB as closely as we should, what is the ECB doing right now? And do you think that there's going to be any sort of divergence in the future where the Fed pauses, but the ECB is still hiking?
The ECB has started hiking recently as well. So they hiked by 75 basis points at the last central bank meeting in Europe as well. But they're clearly running sort of behind the Federal Reserve in this battle. Maybe as the inflation that we see in Europe is even more supply side driven than what we see in the US. And I mean, the European Central Bank is sort of a funny institution, right? It is an institution made up by, I think it's 27 member countries thereabout, and they all hold a seat on the board, right? So in order to sort of form a consensus within the European Central Bank, you will need to have a majority of countries supporting the decision making, and usually there is a huge divergence between the opinions in the northern part of Europe and in the southern part of Europe, mainly due to sort of strong divergences in terms of the public debt load in Southern Europe versus Northern Europe, and that is the exact reason why it's taken so long for the European Central Bank to act, even though inflation is actually running, I'd say, even hotter in Europe than in the US by now. And they are, I'd say, they're trying to do something, but they cannot really do much, given that they also need always to have an eye on the euro construction as a whole when they conduct monetary policy. If they hike rates aggressively, it's usually something that spills over to negative developments in Southern European bond markets and Southern European equity markets. And I guess the euro construction can only swallow such a turbulence in Southern European debt markets to a certain extent. But by the end of the day, the European Central Bank has time after time been called to action to support the developments in Italy and Spain, for example, when they've tried to sort of tighten monetary policy. So it's a very different beast from the Federal Reserve due to all of these country by country considerations that we simply need to be on top of when we assess the European Central Bank.
Awesome. Yeah, great answer. So a lot in the past, there's been a lot of harmony between central banks and their monetary policy. They either were all easing at the same time, or it was kind of surprising if you saw a major central bank kind of out of step with the other central banks. And so there seems to be a lot of coordination there. Does the Fed feel that coordination? They seem to be hiking, and at all costs, they're just going to rise. The dollar's going to rise. They're just going to keep hiking and let the ECB and the BOJ, fend for themselves. So do you think the days of central bank coordination are over, or at least maybe they're, on pause right now, where everyone it's every central bank for themselves?
Yeah, it seems as if we've entered sort of a new regime when it comes to monetary policy, because when inflation is running above target, all of a sudden you actually want to have a strong currency, not a weak currency against your peers, because with a strong currency you import less inflation, right? And that's probably the reason why the Federal Reserve has sort of chosen to move ahead with rapid interest rate hikes despite a very strong dollar, because they know that the dollar at current levels is sort of a global wrecking ball. Just watch the developments in Sri Lanka and elsewhere in emerging markets. They simply cannot withstand the dollar at this level, paired with high food prices and electricity prices at the same time. I think we should expect more more devastating scenes from emerging markets as a consequence of this. But the Fed doesn't care at this time around. They used to care about stuff like that, but certainly not this Fed. And therefore, I think you're absolutely spot on that the divergence that we see between the big central banks will only currently grow bigger. I mean, someone needs to call Bank of Japan and tell them what's going on elsewhere. I mean, they've essentially fallen asleep over there, right?
Yeah.
I mean, every other central bank is moving, and they are still just stuck in a debate on whether to keep interest rates at 0.1 or 0.15 at the 10-year point on their yield curve, right? Quite interesting, given that they actually have inflation above the target, etc., in Japan as well. But my take is, now that I've tried to make fun of them, is actually that they have it right to a certain extent in Japan, because I think in 6 or 9 months from now, we will be faced with a completely different reality in terms of inflation, right? I think the deceleration in inflation will be pretty rapid. And therefore, by the end of the day, it could be that they've chosen the right path in Japan. Let's see.
So speaking about central bankers not necessarily being in unison. I saw a hilarious meme. I actually had to tag Ansel in it this morning, but it was effectively like a slap competition, and one of the girls in the competition had the Fed, and the other one had the ECB, and it was like almost portraying these central banks are taking taking turns at delivering kind of blows to each other. Can you talk a little bit more about like the dynamic of these central banks not necessarily being in unison, and maybe what difficulties that kind of pushes on them from a policy perspective?
Yeah, I mean, the simple pass-through mechanism for a central bank policy is the FX rate versus other fiat currencies around the world. So very clearly, when the Federal Reserve started moving ahead of other central banks, the US dollar started gaining as a consequence of a wider interest rate spread between the US and, for example, Japan or Europe. I think one of the reasons why the European Central Bank simply needs to act with high interest rates now is that they will have to defend the euro exchange rate to a certain extent, because otherwise they will simply continue to import inflation via the FX channel. And I mean, we've all seen the development in the euro versus the dollar over the past 18 months or so, from was it just south of 120 to 0.98 or thereabout today. It's been a landslide. And think about a situation without interest rate hikes from the European Central Bank. They've actually increased the policy rate at the last two meetings. We would have been at, I don't know, 0.95 or 0.9 in the euro versus the US dollar, thereby importing even more inflation on top of an already accelerating inflation picture in Europe. So it sort of changes the dynamic when inflation is running hot around the globe, because all of a sudden this is sort of a fierce battle in FX space, trying to get the upper hand against other central banks when it comes to the relative level of interest rates to support your own currency. Because everyone wants a strong fiat currency these days, in sharp contrast to what we saw throughout the 2010s, right? Everyone tried to sort of manufacture the weakest currency development. Even the US Federal Reserve started involving themselves in such considerations. The European Central Banks certainly did so as well. So this is kind of the world upside down in fiat currency space relative to what we saw just before the pandemic.
Yeah, well, one of the things that people have been predicting for a long time is the end of the euro. And being a Bitcoin channel, we always want to, think about currencies, the evolution of currency, whether it can ever get to Bitcoin and stuff. Do you see the euro facing some sort of existential crisis from this? Or because, I mean, we could get into the politics of it. We had some recent elections in Sweden. We have an election coming up, I think, at the end of this week or maybe early next week in Italy. There seems to be a lot of like Euroscepticism, or EU skepticism, I should say, not necessarily Euro skepticism. But do you see the euro facing some existential threat from all this?
Well, let me put it like this initially. The euro is one of the crappiest constructions I've ever seen. I mean, it is basically designed to fail all the time. So the reason is that you've invited several member countries to the same club without them having some sort of formal policy design that they sort of coordinate across borders, right? So one country enters with a very strong fiscal profile, a balanced budget, no debt, while another country enters the euro construction with a truckload of public debt and massive fiscal deficits, no structural reform, stuff like that, right? So it's really a mixed bag of goodies if you open beneath the surface in the euro construction. So no, I simply cannot see how the euro construction survives for longer than the three of us. I would be very surprised, at least, if it were to survive that long, simply due to the fact that you cannot have a currency union between people with very different opinions on how to run a budget. And I have to admit that the cultural differences between some of the member countries is just humongous, and that's the reason why they cannot agree on sort of a fixed set of rules before entering this construction, right? So I think it's a very bad construction. I think you can hear that by now. It's of course always tricky to figure out exactly when such a construction will eventually have to break down. What we saw through the pandemic was actually a move in the other direction, if you ask me. European unity as a consequence of the lockdowns, and the European Union even started issuing some sort of common debt between the member countries, trying to distribute the bill around the continent, etc. But I think this energy crisis is a whole different beast in that regards, because what we see right now is sort of the first signs of what I call energy nationalism in Europe. So each and every country trying to fill up their own storages before exporting energy to other countries. Makes a ton of sense, by the way. And we have seen a couple of countries already pointing out that, well, if we don't have the energy, then we are, of course, not exporting energy to our neighbors before we ensure that our own population has the energy that they need. So this is a different beast compared to the pandemic when it comes to this Euro construction, because I think there are scenarios this winter that could lead to quite a negative development in Europe when it comes to this energy crisis.
All right. Well, you broached the topic here, the energy crisis. So yeah, I like that idea, the energy nationalism. Can you give us just an update on what it's looking like with their national reserves over there by country? You know, it's starting to get into past summer. I mean, it's starting to get a little bit cooler outside, so I think this might be front on people's minds. I mean, it already is, but you know, might be getting to crunch time a little bit to make some decisions here. So what is the current status?
Well, if we look at the situation in natural gas space first, the storage capacity in Europe is certainly not big enough to cover all of the consumption needs over the course of the heating season from October until March. But the storages are almost full by now, and the European Union basically agreed on a strategy where they aimed at filling up all of the storage capacity in Europe by the 15th of November. And I guess we are very close to filling up the storages already today. So basically way ahead of the curve in terms of storages. The flip side is that right about every European country started bidding up the price of natural gas at the same time, right after this legislation was agreed upon in the European Commission. And that was the exact reason why we saw the explosion to the upside in the so-called TTF natural gas price traded in the Netherlands earlier in August. But now that storages are full, I mean, who's left to sort of bid up the price right now? Because obviously, we're still at a point in the seasonality where we use less natural gas than what we import per day. That will turn around by roughly mid-October, where we will start to see withdrawals from the storages to ensure that the natural gas demand is covered on a daily basis. But to take an example, I mean, we've been talking a lot about Germany, in particular in US media. Will Germany freeze this winter or not? I think the base case is that Germany will actually make it through the winter without even having to ration gas. And I'll tell you why. If we look at the overall storage size of the German natural gas storage sizes, they can storage around 245 terawatt hours of natural gas, and they're very close to filling up those storages completely already today. If we look at a usual month during the heating season, right about 110, maybe 115 terawatt hours of natural gas is used per month. So that essentially means that without any inflows at all into Germany, this storage can sort of cover 2.5 months of heating demand. But we should also remember that the inflow is actually still pretty decent, even though Russia has sort of stopped the flows via the all-important Nord Stream 1 pipeline and also the Yamal Europe pipeline, so the two biggest pipelines running into Europe. But I mean, Germany clearly have other suppliers, Norway, Qatar, the US, for example, and the flow is still running at levels just south of 90 terawatt hours of natural gas per month. So all in all, when we do this calculation, we have a starting point of 245. We have a monthly reduction of 115 due to demand, and we have a monthly inflow of a bit less than 90 from other sources than Russia. Then I end up net with the storage being filled up to an extent of a little less than 100 terawatt hours by 1st of April next year. So it's not that bad. I mean, to me, it's been exaggerated in the US media, but obviously there is a worst case scenario with, a very, very cold winter like we used to know them from, say, the 1920s or thereabout. But if you take sort of the average temperature over the past 10, 15 years, then there are no issues for this winter. I can promise you that.
Awesome. Very detailed answer. But isn't there a threat that the economic damage has already, some of the economic damage has already occurred, of course, with different chemical plants having to shut down in Germany and Poland and those places. It sounds like there could be a dramatic swing in prices down very low before winter, if you're saying that the storage is already full. Is that the case?
Yeah. I mean, the reason why the spot price basically exploded to the upside in August was this piece of legislation from the European Commission. So they asked all member countries to buy natural gas spot at the same time. Not necessarily a smart thing to do, but nonetheless, they've managed to fill up the storages ahead of schedule as a consequence of this. So I think you point to the exact issue. One thing is whether the Germans and the Europeans will make it through the winter without even having to ration natural gas. But the flip side of that is the price that they've paid for the natural gas. And that price is certainly out of league with anything seen ever in history. So I made the calculations, I think a couple of days ago, and you can see it in my Twitter feed, on the energy cost as a percent of GDP in various European countries. And we've gone from paying around 2 to 2.5% of the gross domestic product on an annual basis for all of the energy needed in the economy to paying above 10% of GDP for energy this year. So basically a move of 4 times the level seen in 2020 and 2019 thereabout. So it is a massive game changer, and the European economy is basically an economy designed to lever up on cheap energy from Russia, and that cheap energy is long gone.
So a really interesting situation, right, where European energy authorities are effectively kind of like filling up the reserves at peak prices, almost buying the top on what you are forecasting to, be a probably sharp decline in energy prices. I'm kind of curious, like, how does European energy policy, start moving in a more positive direction following what is probably going to be a pretty rough punch in the face when this is all said and done? People have been talking about going back to nuclear. Obviously, Russian gas is now something that can't be relied upon. Like, what kind of comes next in terms of energy policy?
Well, it depends on which country you ask in the European Union. We need to remember that this is what I call a self-inflicted crisis, because if you look at the decisions taken in Germany and in France over the past 10 years, they've basically allowed Putin sort of a window of opportunity, slowly but surely, by closing down nuclear capacity, deciding to use more or less solely Russian natural gas as sort of the ground layer or the stable source of electricity in the European electricity grid. We should remember that many countries in Europe, they are self-sufficient on electricity via renewables. But as we know, renewables, they are extremely volatile in terms of when, where, and how they actually produce electricity. So what Europe basically needs now is a new stable source of electricity. And I mean, if you ask me, the simple answer to that question is nuclear, but it obviously takes, I'd say, at least 6 to 8 years to really get on top of that regime shift in terms of electricity production in Europe, if we go down the road of nuclear, since well, some countries don't even have sort of the know-how, so we will have to import know-how, we will have to start rebuilding, et cetera, et cetera. It will take years. So I guess the short-term solution, and you've already seen it via the spillovers to the US natural gas price, is to import liquid natural gas via the seaway, basically from the US and Qatar, with an arm and a leg. And we will pay whatever it takes over the next couple of winters to get that liquid natural gas from the US. And right about every country in Europe is currently building capacity to receive liquid natural gas. Germany, the Netherlands, Italy, Spain, they're all trying to increase the capacity. Quite needed, given that it's probably not feasible to expect any Russian gas to come online again.
One thing that I've been thinking about is, there is a lot of energy in the Eastern Mediterranean. And if Europe, they can't rely on Russian gas, and it almost seems more realistic to pivot south and, be more engaged in Mediterranean politics. So that's one of my calls for long-term future is Europe kind of pivots south, back into the Mediterranean politics, Middle East stuff. What are your thoughts on finding, you don't have to go all the way to Qatar. You can actually just go to Israel or Egypt.
Yeah, well, you're absolutely right. Both Spain and Italy receive natural gas flows from the northern part of Africa, mainly Algeria. But you're right that there are resources in other parts of the Mediterranean area, also around the Black Sea, towards the Romanian border. So this is obviously one of the things that we need to exploit over the course of the next 3 to 5 years. But I mean, from the stage where you try to exploit these potential fields, etc., until the actual delivery date, I'd assume that it will take quite some time, even if we know that the resources are there to a certain extent, and therefore the short-term answer is liquid natural gas, to a much larger extent than trying to exploit the underground in the Mediterranean and some of the outskirts of Europe. There is also a huge natural gas field in the Netherlands, just outside of the city Groningen, and I mean, it's running at 1/10 of its max capacity due to some light earthquakes in the area surrounding Groningen, and I mean, in between 20,000 and 25,000 inhabitants of Groningen have sort of filed a case against the Dutch state, and it's still an unresolved matter. But I mean, given that Putin sort of holds a whole continent hostage to this natural gas situation, I simply don't get why we don't exploit that gas field in the Netherlands now that it's already up and running, just because of the risk of an earthquake surrounding that city. But I mean, I'm not a politician. There is probably a reason why.
Yeah.
Andres, I wanna slightly pivot the conversation back to, let's just say, instability with how the euro is constructed and how that might shake out with the stress. Ansel and I on this show, we do talk a lot about being bearish on how the European Union is currently constructed and how the euro as a money is really kind of a weak link in the global financial system. And we actually see the potential downfall of the euro as being a positive for Bitcoin as an alternative to the dollar. I'm kind of curious, what is your take on Bitcoin specifically, maybe cryptocurrency, Tether, Euro, dollar stable coins as part of that, and how that could play in with a negative situation for the euro?
I mean, it's quite obvious when we look at the use case for Bitcoin around the globe that the bigger the turbulence surrounding the fiat currency, the bigger the use case of Bitcoin. We see a relatively strong use case for Bitcoin in many emerging markets. And I mean, should the euro start to resemble the Turkish lira, the Sri Lankan Rangjit, I think it's called, but the fiat currency of Sri Lanka, currencies that have been faced with extreme volatility as a consequence of bad decision making by policymakers, as a consequence of a weak fiscal system, then I think the use case for Bitcoin will also grow in relative terms to the euro, right? So I think you're absolutely spot on that if this energy crisis turns into an even bigger euro crisis than what we've already seen. I mean, it's bad enough when you look at the development in the euro versus the US dollar. Then I think it gets even more tempting to asset allocate to alternative sources of money relative to the euro as a consequence of a lack of trust in the construction, as a consequence of a lack of trust in the fiscal system. And I mean, I don't think we're there yet, but it's like we move there sort of in cycles. We're currently heading towards a new low, a lower low than what we saw in the last cycle, and we don't make new peaks in terms of sort of the fiscal stability and the fiscal trustworthiness around the euro. So it's kind of on a dissipating trend towards zero trustworthiness over time. So from sort of a structural perspective, I think it leads to an increasing relative use case for crypto, either Bitcoin in general, relative to the euro when we are faced with issues like the current.
Awesome. CK, did you have a follow-up for that? I was going to pivot back. Go ahead.
Yeah, no, I guess like if we have to follow up on this, the topic is Bitcoin versus US dollar stable coins. I feel like they're both both currencies potentially could be like a relief valve. Obviously the dollar is kind of the world reserve currency right now. As there's turbulence in other markets, people flood to the dollar. But that also makes life harder because contracts being denominated in dollars, that actually makes their liabilities worse. Like how does dollars, stablecoin, and then potentially Bitcoin as something completely separate, how they interact in this kind of future where fiats are failing?
Well, I mean, I don't think that we can claim that the US dollar is failing yet, even though the sort of long-term value of the US dollar relative to goods is obviously on a downwards trend, right? But it's kind of by design via the monetary policy of the Federal Reserve over the past 100 years that the US dollar needs to weaken versus things that are in sort of scarce supply, right? Such as physical goods. So ultimately, I actually think that it is how the system is designed. And we've deliberately designed the system that way to ensure that inflation is running in positive territory. The flip side to this argument is that if you allow a monetary system to run with a fixed set of supply, then the overall inflation picture will sort of turn around as well, right? If you have a fixed set of money relative to a potentially slightly growing set of physical goods, then you would actually encounter deflation on a running basis. And I mean, you wouldn't get a lot of friends at the economic institute at universities if you started telling them that it would be smart to run an economy on a deflationary trend. I'm a bit more uncertain myself, since it's been quite a while since we actually tested it in real life, right? So, I mean, let's see where we are headed. But I think there's still quite some time before we really try and meddle with the current dollar system. I think the system is basically designed to re-increase the supply of dollars at a running pace, and thereby also sort of re-increasing the amount of dollar credit and dollar debt, both domestically and internationally.
All right, I was just sidetracked. My boy came in here and opened the front door, so I missed the second half of your answer. But yeah, I wanted to pivot back before the end of the show here, because we just have a few minutes left, to the Fed, the FOMC today, and what your outlook is for the rest of the year. I know you said that their dot plots are saying this, but CPI is coming down. So if you had to, I guess, project forward, what do you see for from the Fed for the rest of the year?
Well, I expect them to continue to hike interest rates throughout this year, probably at a lower pace than what we've seen today with the 75 basis points. So I'll expect them to sort of slowly but surely move towards 50 basis points, then 25 basis points, and then towards zero, probably sometime in the early parts of next year. The reason being that it's pretty clear by now that the asset market is sort of reacting to the monetary policy, which is exactly what the Fed wanted it to. If we look at the inflation-adjusted interest rate in the US, it is now in positive territory across the entire yield curve, which is something that we haven't seen in quite a while. So the nominal interest rate is higher than the expected inflation for each and every tenor on the yield curve now. Usually, what we've seen once the real interest rate is back in positive territory is that something breaks relatively fast after that in the asset markets, in the overall economy, for example, in the housing market. So my take is that we have a pretty bad scenario coming during the next couple of months when it comes to returns on risk assets, and from right about everything from equities to crypto, to even bonds in this scenario. And ultimately, that is what's needed to convince the Fed to turn around, because when you break asset markets, when you break the housing market, you also make sure that inflation breaks the neck. Or you break the neck on inflation with a time lag. It is very effective as a way of bringing inflation down, and therefore, the sad message is that we need some more pain in markets before we should sort of reload our positionings. The only sort of glimpse of hope I can find right now in relation to that is that the market sentiment is extremely negative. Just look at the positioning in crypto, in CFTC data. Look at the positioning in E-minis, in CFTC data as well. It's almost record negative. When you look at Bank of America's investor survey among big hedge fund, big asset managers, they all tell you that they are running no risk at the moment, and then they run less equity, less crypto exposure than usually. So, I mean, we're probably not too far off the bottom, but I'm not buying with an arm and a leg yet.
All right. Well, Andreas, really appreciate you coming onto the show and giving us a lot of valuable insight into what is happening in Europe. Obviously, we try to keep our audience really abreast with what's happening globally, but it's always great to have an expert who is living on the ground and can kind of give us that insight. So I really appreciate you. I think that our audience would be well served to follow more of your work, and I'd be excited to hear about where people can find you.
You can go find me on Twitter. I'm extremely active in there, at Andreas Steno. And then you can find me on Substack. My Substack is called Steno Signals. And then you can find me live on Real Vision in 13 minutes from now. So I host the Real Vision Daily Briefing a couple of times a week. And I also have my podcast, The Macro Trading Floor, out each and every Sunday on right about every podcast app. So I guess that was all.
All right, awesome. Thank you again, Andreas. Everyone, you got to go follow this man. Folks who aren't paying attention to what's happening in Europe, he presents an enormous amount of alpha. Ansel, where can people find you, sir?
Yeah, check out bitcoinandmarkets.com. You'll find everything I do there. Thanks, Andreas.
All right,
This was very enlightening, and I hope to get you on again.
Absolutely. My pleasure, Ansel, and CK, it was a pleasure.
Yep, absolutely. And hey, to everyone listening, you can find me on Twitter at CK_Snarks. Of course, everything BitcoinMagazine.com. And then lastly, I will be remiss not to mention Bitcoin Amsterdam. Andreas, I hope that you could actually make it to that. If you don't have a ticket, I'd love to give you one after this. But it's going to be an absolute fantastic time, October 12th through the 14th. Andreas is co-host on his podcast, Macro Elf, is going to be speaking there. And it's going to be absolutely fantastic. Over 3,000 Bitcoiners descending onto Amsterdam to talk about what is happening in Bitcoin. Ticket prices are going up this Friday, so make sure not to wait. Get your ticket now. And Amsterdam and the Netherlands completely opened up and dropped COVID travel requirements. So anyone who is on the fence because maybe they had to take an extra train or whatever, that no longer is an obstacle. So come to Bitcoin Amsterdam. We are thrilled to be hosting it in less than a month. And I would also be remiss not to show the print Bitcoin magazine. So you can get a piece of Bitcoin history every single quarter in your mailbox by subscribing to the print issue of Bitcoin magazine. That is over at store.bitcoinmagazine.com. Use promo code BMLive for discounts across all of our products. All right, y'all. Back to you in the studio.